To a certain extent, these forecasts about the recession are a bit outdated.
The outlook for the world economy, I think, is actually improving.
Keep in mind, all the central banks in the developed world are still hiking rates.
The overhanging main event of the year is going to be what amount of damage have global central banks done to the economy.
I think perhaps for the end of 2023, risks actually are to the downside to the consensus.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
It is CPI Thursday, live from New York City this morning. Good morning for our audience worldwide on TV and radio alongside Tom Keene. I'm Jonathan Ferro. Bramo's going to be back in a couple of days. Equity futures this morning, basically unchanged on the S&P 500. TK, you know it, next stop, 8:30 Eastern Time.
Really important, not normal. Let's ask why. Michael McKee will join us. We've got a great set of guests to inform you of the ramifications on this in economics, finance, and investment. And the answer is, John, it's a great partition. It is goods dynamics and services dynamics. The adults like McKee are going to look at the service changes.
The Boston Fed president leaning into a 25 basis point hike in early February. Is that the direction of travel now, do you think, over at the Federal Reserve?
Yes, I think that's the parlor game. And we're not going to stop the show on this right now, but it's a global CPI Thursday. And it's the same debate in China, in Japan this morning, and to bring it back to the United States. Post-pandemic, is inflation the metric, the price, if you will, of all of those medical ramifications? Goods, almost outright deflation in the United States.
Goods disinflation. So will we get goods inflation off the back of China reopening? You mentioned Japan. Will we get a change of policy in Japan? A little bit earlier this morning, there was a local newspaper report, suggesting there may well be a policy review as soon as next week.
I went right to the Japanese data, which I'm not expert on, always making for good morning television. And you look at Tokyo core inflation, John, off the Bloomberg, and it was 2.5%, and all of a sudden it's 2.7%. So their institutions are pushing against rising inflation still. Citigroup out, we'll talk about this later again, they say they will abolish yield curve control.
Have you seen where JGB yields are this morning?
Haven't seen that.
That far away from that upper band.
Yeah, they're right up.
They're squeezed right in the band. They're right
up
against that ceiling.
It's not that it's been a failure, but they're doing it in steps, and so much of this is maybe an Asian method, much like what we would see in China or, frankly, Thailand.
It's becoming deeply unpopular. I think that's the change over in Japan. There was a survey from the BOJ. It was the BOJ's own survey. More than half of Japanese households said their livelihoods have worsened.
Yeah. I take real issue with how it's covered in the West, and to me it's just rising inflation, and their 3% inflation within the spirit of their economy, off the top of my head, is equivalent to 5 or even 6% inflation here.
Dollar yen 131. Very close to 130, 129, all over again. The lower the session, 130.86. We'll pick up on that in just a moment. Let's whip through the price action just briefly and get you set up for the inflation report coming in about 2 hours and 28 minutes' time. Equity futures looks like this.
Do we have a countdown clock?
Equity futures unchanged on the S&P. I think we probably have somewhere, Tom.
Yeah, we have to have
We'll try and get that up for you.
Supercore clock.
In the bond market, yields lower by a basis point on a 10-year, 352.80. I was looking at where the 2-year was at the close yesterday, Tom. The 2-year yesterday.
Well, there it is. 70 basis points. We're back to negative 7.0 basis points. That's 0.70 percentage points difference between the two yields, and that's significant.
The 2-year at the moment, 422. Do you know where we were at the close of the last inflation report, December 13th?
No, please.
422.
Okay.
Hardly done anything in the last month.
We've
From
had,
point to point,
we've had
anyway.
4 days of equity joy. The VIX 21.75, Dow 34,000. Are we going to get 4,000 SPX?
If we get a big downside surprise,
yeah,
I think that's on the table, sure. But that's if we get a big downside surprise.
Or are we going to recapitulate the next 30 days, have this equity wonderment, and then, oh no, they're going to raise rates.
The Fed's going to raise rates and keep on going. George
Where's Bramo? We missed Bramo. That's what she would say.
Head of US macro strategy at MUFG. George, let's go there. 8:31 Eastern. What do you think that conversation is going to look like?
Look, I think that there's a lot of hype for this number. I mean, it's the beginning of the year. It's the last inflation print before the Fed meeting. And, markets are so super focused on inflation. Look, bond markets have been doing that forever. Equity folks have kind of learned how to operate within a CPI Thursday, Friday, whatever day it is. But literally, I mean, there's so much hype that I'm actually concerned that we've kind of over-tweaked it before heading into the number. And there's going to be disappointment. And it might actually either come flat or even a little bit higher than expectations. And that would really mess up the markets here.
Are we disaggregating in our inflation analysis too much? Are we separating itty-bitty parts of the entire inflation picture too much?
Not only are we doing that, Tom, but we're also extrapolating. I mean, I think it's a prevailing view now, and I think it's right that we're heading lower in inflation, and we've seen a peak, and that's all fine and good. But this is the more difficult time between now and March, where we have like the base effects, which will really kick in higher at that point and really drive inflation lower. But at this point, it's a lot more noisy. We have all these various sub indices that are giving us different degrees of disinflation versus inflation. I think this one's going to be a harder one to call.
George, you're expert on this. You've been doing it for years. Whatever the estimate is, let's say 6.5%. Olivier Blanchard out with his perfect book, and he says we're not going to get back to 2%, essentially. That's the length of his work. What level would make you comfortable? What level of inflation provides Goncalves comfort?
I think as we get closer to 3% on an annual number, but quite frankly, a string of average inflations of about 0.2, which has been the historical average month after month after month. If we see stability, because inflation vol has also been the problem too. It's been all over the place. So not only has it been high, but it's also been random. So if it kind of stabilizes here and we get to a more steady state, somewhere around the threes. But then you have Chair Powell's favorite new measure, the core services ex shelter. That historically has been around 2 post GFC. But before GFC, it was around 3.5. So, are they going to be happy if we get to 3.5%? It's currently running at 6.8 or higher. So, I think that's a big deal here. That's metric that Powell has emphasized. He's really living to that. So, if that thing doesn't come down until the end of the year, the Fed can stay on hold or even hike even further.
George, the payrolls report feels like a month ago. Feels like an age ago. It was Friday. And we were talking about the immaculate disinflation. Can we get wage growth to come in? Can we get that disinflation with that unemployment going higher? Do you think we can?
I think it's tricky. I mean, the long variable lags of Fed policy, it's still working its way through the system. We just don't know. And I think that, we've had decelerated in the jobs picture. We've had mixed signals within the jobs market, still relatively healthy. And there's obviously tightness in the market, but I think the Fed wants some slack back in. They are projecting a higher unemployment rate, and it's going in the opposite direction. They're going to have to fight for it.
Complicated by the growth backdrop as well. Neil Dutter of Renaissance Macro published yesterday. I want to share this with you, George. He thinks the consensus is offsides. He said this: financial conditions are now easing and have been for a couple of months, supporting economic growth right now. Instead of long and variable, I think the lags are short and predictable. George, what do you make of that short-term call, at least for the next quarter or so?
Look, a lot of this comes down to not just the liquidity dynamics and the tightness of Fed policy relative to market conditions here in the U.S. A lot of it is global as well, and what's going on with ECB QE, what's going on with QT, and also the Bank of Japan changing their policy. So I'm not so sanguine on that. We've already had a big rally in the 10-year. We've gone from 4.25 down to 3.50. How much further can you really get in terms of financial conditions easing? So I think a lot of it's already priced in.
George, how does this analysis fold into what our viewers and listeners really care about, which is the housing market? I mean, mortgage rates have come down. I get it, but they got to come down a lot to resurrect the American housing market, right?
100%. I mean, there's a stalemate in the U.S. housing market right now. I mean, there's buyers and sellers that are not looking at each other with a clear eye, and no one's really flinching. I mean, at some point, either supply is going to have to start moving and prices are going to have to start dropping, or rates have to completely come off. But we're not going to get that given the environment that we have of high inflation still and the Fed.
To Irving Fisher, not Stanley Fisher, but of another time ago, is inflation linked to interest rates? There's some point where you get such a disinflationary plunge, they actually decouple.
Well, we've had moments of that before too, but the thing is, I mean, you still have a core base rate of a Fed that's looking to go to 5% or higher, and it's going to be hard to see the 10-year completely diverge from that. And if that's the point, there's all these inconsistencies around market narratives that somehow we're going to have a soft landing, but the stock market is pricing a recession.
Just want to finish on the BOJ, if we can, George. You are of MUFG, so this feels apt. There's a local news report doing the rounds today about potentially a policy review at the Bank of Japan. There's now speculation that they drop yield curve control completely. Where are you on that, George? What's your base case?
Yeah, so we do think that with the changing of leadership at the BOJ, as well as what's been going on with the inflation backdrop, and the need to really kind of open up the actual trading markets and the private markets within Japan back, not just being sponsored by the BOJ, we do think that the yield curve control will most likely be abandoned at some point soon in Q2. But look, it's been a year of record moves in 2022. Now we have these big changes coming out of Japan. I think that they're very methodical. They're going to take their time to kind of ease our way out. I mean, I heard Tom at the Open. I think he's right that it's just not going to be like one full swoop, but it's still going to have profound effects on both Japanese markets, but notably the U.S. bond market, which has been a recipient of flows for so many years.
It's been an anchor of the global bond market for decades now. We've released a couple of those anchors over the last 10 years, including the bond market. George, thank you, as always. George Concaba's there of MUFG. If you look at the FX screen today through G10, you'll just see Japanese yen strength, just absolute standout in the crowd. Dollar yen 130.97 right now, Tom. That's a move of more than 1% this morning.
Yeah, there's a lot to say here. I'm going to go to the ECO screen of Bloomberg on Japan, John, and just one of the tea leaves out there. Inflation-adjusted cash earnings. Remember, with Japan for 30 years, we've talked about disinflation-adjusted or outright deflation-adjusted. Forget about that. There's real inflation there, and real cash earnings were supposed to be negative 2.8%, and they came in negative 3.8%. That's the surveys you see that you mentioned, John, in Japan. This bank is not dealing with Chairman Powell. They're dealing with the people of Japan, which is let's go. Citigroup, unlike what you heard from MUFJ, Citigroup would suggest we're going to see it with Kuroda and not with the follow-on.
Interesting. So this happens before we get to April.
We'll do it later.
Leadership.
We got too much to talk about, but, I mean, it's inflation. Oh, good. We got the countdown clock up, the U.S. CPI report. Can we have a clock that says supercore inflation?
2 hours and 18 minutes away. Is Mike McKee going to come on and talk about supercore inflation?
Yes,
obsession around
actually, seriously,
we should have that chat. Yeah. Coming up as well to weigh in, Seema Shah, Chief Global Strategist at Principal Asset Management. We'll have that conversation in the next hour. Pushing ahead to CPI in America. What does Sarah House of Wells Fargo call it? The final mile?
The final mile.
Was the harder mile.
Yeah.
As we get down to 5, it's the push to 3, 2.
Are the airplanes flying this morning? I think so.
I hear they are.
Yeah.
I hear they are. Some real disruption yesterday.
Yes.
Catch up with Anne-Marie next about that.
Really effective.
She avoided that disruption.
Bramwell got nailed.
Bramwell got nailed?
Yeah,
you heard from her? What did Lisa say?
I got a quick text as she took off. The Gulfstream had to sit there, and they're on the runway.
Futures unchanged on the S&P. Your inflation report. 2 hours, 17 minutes and 53 seconds away.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. Well, have you been hearing? Investors in the Federal Reserve will be looking closely at today's U.S. Consumer Price Index. The projected 5.7% increase would be well above the Fed's goal. Now, that would explain its intention of keeping interest rates higher for longer. But the year-over-year price growth would also show moderation. CPI is due out 8:30 New York time. The UK and the European Union are preparing to enter an intense phase of negotiations to end their dispute over Brexit. The talks are set to begin next week. The disagreement has to do with trade. Both sides originally agreed to allow Northern Ireland to remain in the bloc's custom arrangements, but so far the UK has failed to implement parts of that accord. President Biden's efforts to quell a controversy over classified documents in his private possession has become more difficult. Aides have found a second set of papers, and that's likely to fuel criticism from Republicans, even though they dismiss more serious accusations against former President Trump. And Subway is exploring a potential sale that would value the sandwich chain at more than $10 billion. Sources tell Bloomberg the process is still in the early stages and the privately held company could decide against it. Subway is one of the world's largest quick-service restaurant chains with about 37,000 locations, but its rapid growth has been tapering off. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
We're coming up on the FAA reauthorization where we'll be approaching Congress, indicating the resources and strategy that we think we need for the next 5 years to make sure that FAA has everything that they need. What people need to know is that we will not allow anything to take place that is not safe.
Spare a thought for Pete Buttigieg, the US Secretary of Transportation, who didn't get to celebrate Christmas, Tom, because the events of Southwest starts the new year, and all of a sudden we have that issue with the FAA.
Forget about the politics of this, and I get it, he's a presidential candidate, so obviously the other side's going to go after him.
Unofficially, Tom.
There's no head of the FAA. The reason he's so visible is, can you imagine Anne-Marie Horton as the head of the FAA?
You think that would work?
She'd come out. She would have been there on the tarmac at National.
You're trying to get MH a new job?
She would have been there at 8:45 going, we're going to get this fixed. Buttigieg's got nobody.
You didn't hear much of that yesterday, did you? From New York this morning, good morning. We're hoping for a day ahead full of airline-free chaos, I guess, Tom. No disruption whatsoever after the mess from yesterday. Equity futures right now on the S&P, totally unchanged on the S&P 500. Equity futures going absolutely nowhere after putting together 2 days of gains on the S&P. Can that continue? Yields are lower by a basis point or two on a 10-year, 352.25. Euro dollar 107.63. Basically unchanged there too. WTI crude 78.35, so positive 1% there. Jeff Currier Goldman on with Guy Johnson yesterday. Best reopening play. Straight up, he just said it's crude. Then he came out with a monster number for copper. Take a listen to this. End of 23, 11,500 at the end of 2023.
We're 9,000 right now.
We're through 9K in the last day.
Mike McKee emailed me how to get the LME quotes because I didn't know how to get LME quotes, and McKee's helping me.
I think it's LMC
LME
AD S03. Is that right?
Yeah, whatever. But the screen for dummies like me is LME Go.
That's right.
It's really
still right.
important.
Just double check that ticket.
It's a running joke, but we're not de-emphasizing commodities right now. Will Kennedy's going to join us here in a moment. She flew in from Mexico City, BOAC, yesterday, and she could land. Anne-Marie Horton joins us with the president of Mexico City, landed down at Dulles National, whatever, and joins us from her studio in Washington. How antiquated is the FAA, Anne-Marie Horton, and can they improve its budget given the budget frugality of a group of Republicans?
Well, just to also set the record straight, Tom, I was able to get home. I did suffer a little bit of a delay, but my photographer is still stuck at a hotel very close to the Mexican City airport because he was delayed because of this chaos of the FAA.
Make jokes.
So
it's not funny.
it didn't just affect domestic flights. There was roll-on effects for some of these international flights as well. Well, we should point out that in April, the FAA came out with a statement talking about the fact that they were going to begin receiving and using $1 billion of the $5 billion that was allocated to them from the hard infrastructure plan. But you bring up a point, Tom, that many people have criticized the transportation industry in general, is that they don't have enough funding. We've spoken to sources on background talking about the fact that some of the technology that had to deal with this shutdown in one of these databases is just antiquated. So there's a lot of law, but this is going to become very political because the fact that Pete Buttigieg, the Secretary of Transportation, is very much so potentially on the short list or bench for a future presidential candidate for the Democrats.
The bottom line is, whatever anybody's political persuasion, there's a mist of frugality across Capitol Hill. So there's a fire at the FAA. We got to throw money at it. There'll be something 2 weeks from now. We got to throw money at it. How do we develop a frugality demanded by certain Republicans?
Well, the point I was making earlier is that they are receiving new funding from the hard infrastructure plan that was supported by both Democrats and Republicans. And they talked about last year that they are starting to use that funding already. This is everything from technology to also restoring some towers to, across the entire industry. So there is money that is flowing into the FAA.
See how she gave it to me there, just like Bramwell?
Big time.
We're not even missing Bramwell. We got Anne-Marie.
But you missed the punchline.
Just
AMH travels with a photographer.
Yeah.
Did you know that?
Well, I don't.
When did AMH travel with a photographer?
Guy, like Al Franken years ago at the conventions.
How do you think I got on TV?
Big boom. She's running around.
Oh, he's a cameraman. As in, okay. But I thought she referred to him as a photographer.
She's got a whole
Matt Tomlin. Well, he's both. He's really
he takes photos of you too. Wonderful. We need to go around with photographers.
We do. You know her dog that she travels with? She's got a waiver to take a dog with her.
I didn't know that.
Yeah, the dog's name is Bellman. It's incredible.
And travels with her.
Yeah.
Down to Mexico. Yeah. Unbelievable.
Bellman, sit here.
AMH, let's get serious. Classified documents. The President of the United States. The former President of the United States. Where's this going?
Well, this is going to create a lot more headaches for the Biden administration because first reported by NBC News yesterday is that they found a second set in a new location of classified documents. And the questions facing the president now is on the first set, specifically on why was the press only issued a statement after CBS News broke this report and what is in those classified documents. And this is something that the press secretary yesterday really did not want to answer. Now, on the heels of all those questions, they have to answer what is in this set of new documents, where were they, and how were they handled? And obviously, everyone in Washington on the GOP side is drawing parallels to what we saw with the prior president and his classified documents at Mar-a-Lago. Obviously, facts are facts. There are some differences between these two issues, but the president is going to face criticism for potentially being hypocritical in his remarks about the former president.
Well, bringing up his words that he used for the former president about the same thing, which is that the former president was, quote, totally irresponsible. To your point, Anne-Marie, there are some important differences here. We won't explore them right now, but I think a lot of people wondering the same thing. Why does this keep happening?
It's a great question. You know, I don't really know why this keeps happening. I think with the former president, you know, the differences is obviously his lawyers signed off that there were no documents, government documents or classified documents at Mar-a-Lago. That was a false. There was a subpoena. There was a search and seize. There was classified, including top secrets, and then hundreds of other government documents. With the Biden administration, unsure why the president had these documents. They were from his time when he was vice president. They were in his private office when he left. But what we do know is that when they were found, they were immediately given to the National Archives. The National Archives were alerted, and his lawyers have been handling it since then. But it's a great question. How does this happen? How is there no procedure at the end of a term to make sure that everything is accounted for and is not being leaving Pennsylvania Avenue?
Absolutely bizarre. Fantastic to catch up with you, Anne-Marie, as always. MH, welcome back to Washington. Anne-Marie there. This on Twitter. I guess someone's got to take the pics for IG. For Instagram.
Got that right.
Is that why she travels with a photographer?
Yeah, Francine is a photographer too.
Does she? I didn't know that.
Oh, yeah,
I did not know
Francine's
that.
Huge on Instagram.
We've been missing out on that, haven't we? Have you even got an account? I don't have an account.
No, I mean, they cut my entourage back. I'm down to 7 people. You know, they cut it back. I had 9.
I saved the handle on Instagram a long time ago, so I have the Ferro TV handle. I've just done absolutely nothing with it.
Do we have Jordan Rochester today?
We should catch up with him.
Do we?
I'm not sure we do. Over at Nomura.
He just
116
stunning
euro
call
dollar
on Euro Swissy.
On
which
Swissy
is much
as well.
More of a Euro-center call. This is inside baseball, folks. But this goes to the inflation ramifications of Spain, France, the United States, Japan, China. This is a global inflation Thursday. And I'm sorry, he's got a jump condition call out to a weaker Swiss franc, stronger euro. 104 is the number for those keeping score. But that's a big move.
Short-term call 110. Long-term call into year-end 116 for euro-dollar anyway.
Yeah. For euro-dollar, it's different.
Saw Jordan published this morning. The president speaks later.
I did not
Curious,
know
isn't
that.
it? Yeah, 8:30 Eastern time we get the CPI report, then 10 Eastern we hear from the President of the United States talking about the economy. You think they're expecting some good news here?
Come on, I don't know the politics on this. Seriously, folks, I don't know the process, but they got to already have the numbers. I mean, the CEA, Heather Boucher and the rest of them, they have to have the numbers.
McKee will confirm that. We'll have a chat with Mike a little bit later.
We're going to have a couple chats with Mike.
About Supercore. We'll talk to Michael Pond about Supercore
Vince
as well.
Reinhardt,
Head of inflation-linked research at Barclays. Timely guest. Coming up shortly.
Michael Pond.
Coming up next, very cool. Equity futures right now, unchanged on the S&P. Bonds not doing much, 352.98. And crude, 78.33. Positive 1.2%. Tom mentioned that Rochester call over at Nomura on Euro Swissy. Euro dollar, he thinks next stop here. By the end of the quarter, 110, 107.61 right now. Two hours away from CPI data in America.
2 hours, 22 seconds.
Is that right? Are you counting down? Equity futures look like this on the S&P. Equity futures totally unchanged after a couple of days of gains on the S&P 500. Over the last 2 days, gains of about 2%. In the equity market on the Nasdaq, we're down about 1/10%. No real drama there. 2s, 10s and 30s in the bond market look a little something like this. Your 2-year up almost a basis point to 4.23. On a 10-year, down to about 3.53. In the FX market, we mentioned Jordan Rochester of Nomura about 5 minutes ago. He said this: expect better European data, inflows, terms of trade, falling US CPI and more to boost euro-dollar towards 110 in short order, with 116 by year-end now in mind. Euro-dollar right now, 107.63. The big move you're seeing this morning, though, is dollar-yen. A local news report suggesting there might be a policy review at the BOJ as soon as next week. Tom, you mentioned that City call, that they might drop yield curve control pretty quickly.
Amy, you got that board on there? Let's try to get this up right now. Amy's in the control room trying to keep track of the countdown clock, and maybe we can get up the City board. These are the two heavyweights in Tokyo with Citigroup, and they put out a blistering note in the last 90 minutes, and it's real simple. They look for the yield curve control to be taken care of now. John, the major thrust of their note is let's get out front and get this fixed now before the next BOJ leadership.
Will we see a test of this Japanese government bond market, Tom? I'm looking at JGBs right now, the 10-year, just short of 50 basis points today. 0.4999%. It's right there, bumping up against it.
To collate our punditry, they're looking for 115. So that's sort of the mixture, I would say, from a 150 down to a strong yen 150. Let's look at the Citigroup comment. This is a bold statement. Mike McKee says they're catching up with others. We expect YCC to be abolished. BOJ meeting coming up here in a bit, comparing the impact of abolishing yield curve control under Kuroda and under the next governor. We think the former would cause less damage. This is a very negative report. Less damage now versus more damage later. We believe it unlikely that inflation or wage growth will rise sufficiently or sustainably enough to prompt additional policy adjustments. So they're looking at a measured path here, but let's go. And that means weak dollar, strong yen.
So it's only back in December we were talking about a more sustainable policy set up by the BOJ, and that's why they adjusted their yield curve control. And just lifted the band up, and we're going to adjust it again a month later.
Yes, we're going to
adjust
adjust
like that.
Well, but the adjustment failed. That's what the observation.
I still remember a conversation I had a long, long time ago, years ago, about central banking, and I won't mention the person who said this to me.
Was it Michael Pond?
I said, "What makes a good central banker?" And do you know what they said to me? Someone who's good at lying. Someone who's good at lying was the answer.
You're going to get in trouble.
You know,
we're going to de-emphasize.
We're going to talk about
de-emphasize your interviews with central bankers.
If we're going to talk about yield curve control on a sustainable path, and then a month later talking about it getting dropped, I can't keep up.
What do you got, John?
I've got 1 hour and 57 minutes and 16 seconds away, Tom, from the CPI report. Being seen as the key data point for the Fed's way forward. This is what Michael Pond of Barclays has got to say about it. Given the momentum in economic activity, the very tight labour market and still unacceptably high inflation, we continue to expect the FOMC to further raise the Fed funds target range at the February and March meetings, Tom, and to stay on hold in Q2 and Q3.
This is a treat for Global Wall Street on this incredibly important day. Push the jokes aside. This is really serious for Global Wall Street. And they turn at Barclays to the guy definitive on the global sense of full faith and credit, debt, and inflation. He is Michael Bond, head of global inflation-linked research at Barclays, which barely describes a competency. Which part of the linkage of inflation to your linkage of yield analysis, which part matters this morning?
Tom, it's all about wages. In the spring of last year, the Fed started to lose control of inflation. It kept saying, oh, it's transitory, it's going to come down, and it basically gave up on its forecasting ability. Historically, though, the Fed ran monetary policy based on a Phillips curve, wage-driven inflation approach. And they've essentially gone back to that. So really, it's the labor market that almost matters more than today's inflation report. But the Fed is now focused on the sliver of CPI that is wage sensitive. So get rid of core goods, get rid of energy prices, get rid of anything that's not attached to wages. That's still high, and that's going to keep the Fed hawkish.
But Michael Bond, this is what Global Wall Street wants to know. I brought it up with George Congalvis before. It's going to come up all morning, including with Vincent Reinhart, the expert in economics, later. Michael Bond, do you aggregate the information this morning? Or are you going to slice and dice it in your strategy forward for fixed income?
Absolutely, because we're going to look at the components that give us information going forward. So, for example, the shelter component, which is 40% of core CPI. So it's really important. Because of lags, that's likely to be very strong in today's report and perhaps in the next several months. But we know from incoming data on rents that the rental market has almost cratered. A lot of series that we see on private rent series have basically shown zero rent inflation over the next several months. So if you slice and dice the CPI data into what gives you forward-looking information, that's what's going to matter to the Fed. Right. The Fed thinks that the forward-looking information is all about wages.
John, this is critical because you and I are biased by New York City. The rest of this nation isn't what we're living on, Manhattan.
Oh, totally agree. Totally agree. And to pick up on something Michael's been saying, Michael, it's only a few months ago, not so long ago at all, that Chairman Powell implied there was no space for nuance here. Why all the nuance now?
Well, again, you talk about what makes a good central banker. I think what makes a good central banker is patience and consistency. The Fed has been incredibly patient and consistent since the Jackson Hole speech, which was very hawkish. The market wants to hear a dovish pivot from the Fed. With every piece of data, the market looks at the most dovish piece of information. So in the employment report, it dismissed the drop in the unemployment rate and instead focused on the modestly softer average hourly earnings growth. In today's report, the market again is looking for a dovish pivot from the Fed, but the Fed is consistent here. We think that keeps them hawkish.
Is that a problem, Michael, do you think, for Chairman Powell?
We don't think so because, again, the Fed is a risk manager, right? If a year from now inflation is too high and inflation expectations are too high, the Fed will see it as a policy mistake. If instead we have a modest recession, but inflation comes down and inflation expectations seem low because they overdid it, that's going to be a win for the Fed.
Mike, in your world, do you have a conviction to go long, short, long duration, zero coupon bonds? Is this a point where Michael Pond's out in Vegas betting on interest rate direction?
Not yet from a nominal perspective, and it's because, again, as you were saying, you really have to break it down into the real and inflation components. Inflation as priced by the market is already very low and not likely to go much lower unless things really deteriorate on the economy. Real yields, though, are fairly elevated. In the front end, we have forward real yields at around 2%. That's very restrictive policy, and not just in the next couple of quarters, but even deep into next year. So we think that there is scope for real yields to go down, but nominal rallies might be challenged by already low inflation expectations.
Where are we a year from now on the 10-year yield? People's heads are spinning at home. You got them way going. You're all Febosi this morning, Michael. Stop it. Where's the 10-year yield in 12 months?
You know, I think there's certainly scope for it to move down further. Particularly if we get a recession as we're expected. I'm not going to put a specific number on that, but again, a deeper recession could bring us back inside of 2%.
Michael Pond at Barclays, there's a call to get inside 2% potentially. Michael, thank you, sir. Wonderful to catch up with you over at Barclays. If you're interested in some of the estimates right now, the median estimate in our survey at the moment, so this is headline inflation year over year, which always makes the front page of the newspapers, you know that. CPI year over year, the estimate's 6.5% from a previous month, which read 7.1%. The numbers this morning for the month of December. So if you take out food and energy, Tom, month over month core, which will be our first look this morning, I'm sure, 0.3% the estimate, 0.2% the previous month. Then Mike McKee's going to break it down for us, strip out, shout to get to all that nuance and all that good stuff people are obsessing over at the moment.
Well, for people like me that don't obsess over all the numbers, the answer is the adults like McKee are looking at month over month right now. The dynamic there is so important. One thing I'm comfortable with, folks, is not month over month, but year over year, but the 3 month and then annualize it. So take 90 days of data and then pretend it's a year long. And those lead to some really interesting charts.
Do we think these trends have become entrenched? These more recent trends have become entrenched?
You can say goods have reverted to in the vicinity of where they were December 19. Services have not. there's a little bit of an ebb in services. On radio, I'm moving my hand.
It's very effective.
We're de-emphasizing hand signals because
why is that?
Radio's complaining,
hand signals.
They got a hate mail from Anthony from Sparta. He was vicious.
Well, if you grow up in an Italian household, you're very expressive.
Yeah,
Tom.
he is.
I learned how to use my hands. Just became very expressive as a child.
Yeah,
AMH the same thing.
It's like you're landing airplanes on TV.
You throw your hands around. You just get used to that.
I grew up in a state, and I'm like, my hands are in here. Don't move your hands.
What, like that?
Yeah, you're very.
No, we weren't like no. The first hand signal you learnt as a child was that. Never followed through, but that was enough.
You know what? You'd be pleased with the LME guy. We used to quote gold at the Keene house off Spot Gold London.
Oh, really?
Yes.
Why was that?
It goes, I don't know, great grandpa, who the hell knows?
Did they quote the LME as well? Just more broadly for things like copper, metals?
I remember the day Nixon took us off the gold standard. I remember there was a lot of yelling and screaming there.
At home?
Yeah, the floor buckled upstairs. My mother had so many Kruger rans.
My granddad used to have them too.
Yeah. I mean,
yeah.
Let me tell you, her Kruger rans worked out a lot better than my controlled data.
If they're out there at the moment, I'd love some. If anyone wants to send them in.
Please send
Tom, I'm told we're 1 hour, 49 minutes and 16 seconds away from
That's
this
good.
CPI report.
It's a super core inflation.
I'll keep us up to speed.
Brought to you by Patek.
Is that right? Is that right? Leland Miller's coming up, the CEO of the China Beige Book. Looking forward to that conversation. Where are we with China and this reopening, Tom? Where does this demand show up? How quickly does it snap back in?
We got a huge pressure to talk about the United States today, but this is serious. And there's a lot of notes about an imputed inflation already in China, which gets up. One shop had a red line of 3%, and they're getting there fast.
Does this disrupt some of those trends we're seeing in the US CPI report? You talked about goods disinflation becoming entrenched, maybe.
Yeah,
we'll see.
I believe they're, independent. Somebody's just emailing in and whisper CPI.
What's that? But it's just like the guest going into it.
McKee's on his phone. McKee sits somewhere near me between my entourage and him, and McKee's on the phone.
What's whispering it? Who does he whisper it to?
I don't know.
Just to be clear here, Mike McKee does not have the inflation report. Okay, 8:30 Eastern Time, which is an hour and 48 minutes away. We will get the inflation report. And then after that, you'll hear from the President of the United States at 10 a.m. Eastern Time, so 90 minutes later.
They held the price on Tang, no inflation there.
Yeah, from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Well, as you've been hearing, traders are betting that U.S. inflation is cooling. Now, that would reduce pressure for aggressive rate hikes from the Federal Reserve. We'll get the latest consumer price index at 8:30 New York time. The projected 5.7% increase would be well above the Fed's goal, but the year-over-year price growth would also show moderation. The U.S. and Japan are taking steps to counter the growing challenge posed by China and its ties with Russia. They announced plans to strengthen defense cooperation on land, at sea, and in space. The U.S. plans to reorganize its forces in Japan so it can deter and respond better to increasing regional threats. China hasn't updated its daily COVID report for 3 days. Now, that's adding to global concerns that Beijing is masking the true impact of the world's largest outbreak. The World Health Organization has renewed its call for more COVID data from China. And Bloomberg's learned that the corrupted file led to the breakdown of an air safety system that prompted flights to be grounded across the U.S. Both the system that provides critical information to pilots and its backup failed. Almost 10,000 flights were delayed. Bloomberg's learned that T-Mobile may buy the budget wireless carrier backed by Ryan Reynolds. Now, it's called Mint Mobile. The second largest U.S. mobile service provider has been in talks with Mint, but no final decision has been made. Reynolds owns about 1/4 of the company. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
The outlook was for last year for the global economy to be weak. Now I think there's the markets are signaling that the plunge in natural gas prices in Europe suggests that Europe may not have a recession after all. And now with China abandoning the COVID policy, opening up, there's a perception that we may get a terrible wave of the pandemic for a few months, but then it should abate and China should open. So the outlook for the world economy, I think, is actually improving.
Can you hear that? Cracks in the consensus and the outlook. All of a sudden, people getting more and more constructive about the outlook here off the back of that China reopening story.
Yardeni's been way out front for the last 6 months. He said, everybody calm down.
Ed Yardeni there, of Yardeni Research. Not the only one. Julian Emanuel, the Chief Equity and Quantitative Strategy Overist at Evercore ISI, on Tuesday announcing quite the call from his firm on China GDP.
We think there's a very good case to be made for China assets right now. In fact, our China strategist, Neo Wang, thinks we get to 6.2% GDP growth.
6.2%. 6.2%. Tom, 6.2%. That is just phenomenal.
It is a phenomenal number, and it's what we do, as we did with Michael Pond on inflation. We want you to speak to an expert. Out of Virginia, he's really something. Leland Miller, John, with China Beige Book, and you look at Leland Miller, folks, and you say, well, what's so special about him? He has a granularity on China like no one. He framed 6.2% GDP this morning. Leland, what do you do when you hear 6.2% GDP from some competent people like Ed Hyman? How do you react to that in China?
I think that you could get some extremely high numbers of GDP next year, but it's based on the idea that you're not just going to have the cyclical bounce back, which we expect, which is, firms restarting investment after COVID-0's pullback, consumers jumping back in, albeit temporarily, getting the pop off of 2022's very low basis, statistical basis. But in addition to that, in order to hit 6.2, you're going to have them layer on stimulus.
Yeah,
it could happen. You're seeing headlines about stimulus, but you have to expect them to be doing all these things at once. So it could happen, but it's much too early to be guessing that with any type of clarity.
To your expertise, like folks, the electrical grid from Shanghai out to the west, Leland Miller, if they impute a fiscal policy, can they diffuse that stimulus faster because of the power of the government, the totalitarian regime?
It depends on what kind. This is the question of 2023. And we just built a proprietary fiscal stimulus index to be able to track the flows that are going into fiscal spending. We have a fiscal activity index to see what's actually happening. And what's happened in December, for instance, is they're pumping money in and absolutely nothing happened. The activity index fell off a cliff. So it doesn't, just because you see a stimulus headline doesn't mean it's being worked into the economy. So that's the real problem with 2023. Are we going to actually see these big headline numbers and even some of this easing that we see more broadly? Will it translate into activity?
How does this economic discussion translate to the medical discussion the nation faces right now?
Well, Beijing's doing their best to pretend that COVID-0 is going to be a blip for a month or two, and then they're on their way. And to some degree this will happen, but I think that the fact that they're acknowledging virtually no deaths, and most people are thinking they're going to see 1 million deaths, you have to understand there's going to be a cascading effect through the rest of the year. It doesn't mean you're not going to see a nice cyclical bounce back. It doesn't mean that Chinese assets aren't going to rally like crazy for a while. It just means that this is not something where you can dive out of and have no effect in the middle. And you also have the possibility that later on in the year, you have another problem with COVID. So there's a lot of potential risks here that are getting camouflaged by people's optimism over the fact that the middle of the year should look quite good.
Leland, the China that's reopening is not the China that's shut down. There is an argument from many that perhaps this consumer, the Chinese consumer, is a little bit more nationalistic. Leland, we're trying to work out where this demand actually shows up, kicks in. Does it go abroad? Do people travel to Canada, Vancouver, try and buy property like they tried to before? Trudeau's trying to stop that. Governor DeSantis is trying to do the same thing in Florida. How do you think this is going to pan out?
Yeah, there's been this idea that just because Chinese consumers haven't spent for a while, that they're going to take their money, they're going to run out of the country, and they're going to spread it around the world. This has never really been the way it works. Chinese travelers used to spend a lot of money abroad. They're not buying a lot from abroad, but I think even the travel parts have to be moderated right now. People are seeing their relatives domestically for the first time in 3 years. Plane ticket prices are through the roof. There's just a lot of guessing people are doing in terms of skyrocketing travels coming back and skyrocketing this is coming back, and China's going to guide us into the next stage of global consumption. This has never been true. So I think we need to be very, very cautious on assuming Chinese consumers are going to do anything for the world.
Leland, just one final question from me as well. I think we're all trying to work out how much bad data we'll have to look through in the near term, and for how long, which basically is what you're touching on at the moment, Leland. How quickly do you think this will snap back in, and we'll start to see that good stuff in the future?
Well, look, I think Q1 is going to be a mess. The second quarter is when you'll see a reactivation of the economy, and you're going off, very low 2022 numbers. So people could be very, very pleased with the bounce they're seeing the middle of the year. The key part is this could be a head fake, because maybe you see 3-4 quarters of growth pop back up. You're still in the midst of a long-term structural slowdown. So for the next, for most of 2023, people are going to be talking about the cyclical uptick. But then after that, as we get towards the end of the year, we're going to start re-talking about the structural slowdown, which is going in the other direction.
Leland Miller there, the CEO of China Beige, one of the best. Leland, just fantastic as always, sir. Thank you. TK, you heard it there. Trouble in the near term, very, very short term. You get through the messy Q1, snaps back in, really strong growth through the rest of this year, and then you have to deal with those structural challenges that still exist in that economy.
Their political challenge is at the margin, employ people. And the outro on that has always been state-owned enterprises and secondarily real estate. Within all that wonderful discussion and very informative discussion, I wonder what I'm speaking here from a distance, the pseudo-fiscal impulse will be to bail out once again the commercial and residential, the apartment real estate, the city building real estate.
Well, I wonder
business.
if residential picks back up again in China. As I say, the China that's shut down is not the China that's reopening. And China reopens with lower rates in a way that maybe the rest of the world is facing higher rates. China doesn't have that, Tom. And maybe they have a bit more capacity to support the economy. So we're slamming the brakes abroad, and over there they've been doing something else.
And on a broader scale of 10 or 20 years, we've become addicted to a 5, 6, 7% China GDP. Are they going through this process to reset? And I'll let you pick 3 or 4% GDP. John, with the COVID, we've de-emphasized our coverage of Pacific Rim. But I can see you, me, and Bramo in Shanghai.
You want to go to Shanghai?
Yeah, I think, on the Bund, the Peace Hotel, looking down the Bund and get the pulse there. We have Leland Miller over and...
you picked the bar out already?
Yvonne,
is that where this is
Yvonne
going?
can come up from Hong Kong and we can listen to some jazz at the Peace Hotel. And,
okay. Can you go? I mean, I'll give it a miss. And you go.
No, I think you should attend. I think the reopening of China is a surveillance story.
A surveillance special?
It's a surveillance.
Okay.
No, not a special. It's a weak commitment.
Are there family members that you'd like to see and
no,
you'd like
no
to expense that?
Members,
I mean, you were telling us earlier how expensive those flights cost.
They'll hold the lamps. I am mounting $34,000 business class.
That is ridiculous. I mean, come on, that's nuts.
Where we are right now.
Seriously?
Yes, that's what came
insanity.
up on the screen.
That is insanity.
Mr. Kirby, I saw that on your website 2-3 days ago.
Is that like a month away, a week away?
Oh, no.
How soon was that flight?
3 months out, and then it went away. It disappeared because probably we mentioned it.
Okay, I'm going to have a look at that in a moment.
Yeah,
okay, let's get you set up for inflation. We're counting you down. Where's that clock? 1 hour, 35 minutes, 15 seconds. I'm just doing that to wind you up. Futures unchanged on the S&P going into this. 8:30 Eastern time is when you get that CPI report. The president speaking 90 minutes after that. Bit of Fed speak today as well. You'll hear from a number of speakers, including Tom, Harker, Bullard, Barkin. All talking. I know you like to follow Bullard. He'll be speaking a little bit later.
Well, no, I like to follow all of them. And what I'm really interested in there is Harkin. I think that he's got a real grasp on business activity. They're all different and unique as well. Where's stagflation? What happened to stagflation?
It's not over yet. It's not over yet.
Well, we're living it.
You get 5%. Look at the forecast from the World Bank. I'm not sure how many people believe in those forecasts, but they've got Eurozone GDP this year at 0.
Well, yeah,
they've got US GDP this year at 0.5. Now, maybe other people want to take the other side of that, but that's their call.
Malpass was lights out yesterday on the uncertainty the World Bank has about China. And I would suggest the enthusiasm of the last week up to Dow 34,000. SPX is going to give me 4,000 here in a bit. And John, this enthusiasm is flat out China opening, and that's not in the World Bank view.
Oh, it's in the commodity price, that's for sure. Copper through 9,000. Goldman talking.
In Chicago, it's 3 point something.
Goldman talking up 11,500.
9,000 to 11,000.
Copper.
Big move.
Just wow. Huge numbers. Futures unchanged here on the S&P. The inflation report just around the corner.
To a certain extent, these forecasts about recession are a bit outdated.
The outlook for the world economy, I think, is actually improving.
Keep in mind, all the central banks in the developed world are still hiking rates.
The overhanging main event of the year is going to be what amount of damage have global central banks done to the economy.
I think perhaps for the end of 2023, risks actually are to the downside to the consensus.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
CPI in America, 90 minutes away. Your inflation report just around the corner. Live from New York City this morning. Good morning with Tom Keene. I'm Jonathan Ferro, counting you down to that report. In about 30 minutes' time, we'll also catch up with Torsten Slog of Apollo. Torsten with a note out just moments ago with the big question, I think the key question this morning, TK. Can the Fed and markets get inflation back down to 2% without a recession? Can we see that happen?
Torsten's been on fire at Apollo, and it's going to be really good to get a base case for him before this 8:30 report. My problem with this is the idea that the Fed has an ability to guide inflation. As we heard earlier from Michael Pond, he would suggest wages are what guide inflation, and maybe a little bit of housing is a huge component for us, food for a huge component for us. I would also suggest on a rather large percentage of our listeners and viewers really don't care about core. They're living 6% inflation.
Yes, super core. How do you think we respond to that?
How do you respond to it?
We strip out
Forget
food,
about
energy, shelter.
Social message from Bloomberg Surveillance from Lisa, John, and I. In aisle 6 at Whole Foods, nobody cares. There's aisle 6 at a grocery store where I'm trying to get to Friday. 6% inflation matters.
It's a huge problem. So, Tom, we entered 2023 thinking we'd be talking about the price we'd have to pay for a year of monetary policy tightening, 400 basis points plus from the Federal Reserve, still more to come. And then everything gets complicated by China's reopening. We thought we had a nice, perhaps entrenched disinflationary trend on the good side of the equation. Does China complicate that? Then that's a question we've got to ask going into 8:30 Eastern Time.
China's too big. It always complicates, and it's about supply side shocks. Torsten's talking about still the supply side shocks off of the pandemic ebb. We're still in that dynamic, and that means we're still in a China, more of a China shadow than we usually are.
Counting it down to CPI, equity futures just about positive, up by almost 1/10% on the S&P 500. Yields coming back in by about a basis point on a 10-year, 352.43. In the FX market at the moment, 107.63. Euro-dollar really not doing much on euro-dollar. We mentioned Jordan Rochester of Nomura. They've updated their call, euro-dollar. Tom, do you remember those calls, sub-parity, and now we're talking about 110, 116.
Well, things have changed. I mean, I'm sorry, I can't remember. I think it was Jordan today. They put in red ink on their black and white publication.
I saw that, yeah.
Things have changed. I mean, hello, things have changed. And I as I said yesterday to one of our fans from Western Indiana, I said, I'm sorry, we need to go to London where the shock is there and the nexus between Frankfurt and Washington.
You always want to trip, you do. Speaking of red ink, red ink right now on the Bloomberg. American Airlines, prelim, fourth quarter adjusted EPS, 112 to 117. The estimate, 60 cents. So I'm just looking at some of these numbers here. Fourth quarter revenue to be up 16 to 17% versus the fourth quarter of 2019. There's a turnaround for you. The stock is up by about 2% in the pre-market. Tom, 15.69.
Yeah, and it's amazing. I'm going to say the more beleaguered American Airlines and some of the other high flyers, that according to so many on the sell side. And I'm looking at the chart just coming, into the pandemic, it was on a trend downwards. Pandemic 30 to 10, and it's only come up $5 off of $10. A lot of these airlines have a lot of recovery space to go to get back to the nirvana of autumn 2019.
Early days in 23. January 12th, but decent start to the year for the airline stocks. At least we'll pick up on that a little bit later. Joining us now, I'm pleased to say, Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, wonderful to catch up with you. Inflation data, 8:30 Eastern Time. Run me through what you and the team are looking for. I asked this question yesterday. It's a difficult one to answer. Guessing the inflation's one thing. Working out what the market's going to do with it is another.
Yeah, hi. Well, we, like the rest of the market, have no choice but to follow what Powell is focusing on, which is that super core. I think it's a little bit dangerous, I have to say, to cut it down into such small components. There's so much margin for error there. But we, like everyone else, are going to be focusing on that. We're going to be looking at that simply because of its read through to wage pressures. Now, consensus, it says 0.3%, but I have to say that I haven't seen anyone out there who's expecting 0.3% or even above. It's really 0.2%. So I think if there is anything which is above 0.2%, that's going to be a really negative market reaction. 0.2% below, we're probably flying a little bit from there.
Where are we on the service vector? Do you have a trend in place for service sector disinflation, and how does that fold over to the markets?
Yeah, look, we're looking at the numbers. I mean, I think services disinflation, we are expecting it to come through, right? So we are anticipating that core CPI, along with headline CPI, continues to come down over the next couple of months. And that's with core goods inflation. Let's take China out of the story at the moment because that could change a couple of things. But core services as well, as you start to see that economy moderating. Our concern really is around the middle of the year, right? So we think inflation can easily come down to around 4.5%. 4.5% beyond, though, is more of a challenge. So for us, it's really, we can go through the paces and follow the market and just watch what Powell's talking about. But I think the real story starts around the second quarter of the year when we start to see if inflation can meaningfully and easily push through that 4% barrier.
How does China play into this? You've got a beautiful idea, Seema, the idea of unleashing the dragon. Okay, so China comes back, whatever the number is. Leland Miller maybe doesn't get to 6%, but China improves. What does that do to investment allocation, institutional and retail, in America?
Well, look, it really does depend on not just the short-term post-reopening bounce, but how long can it be sustained? And whether or not it can be sustained is really going to be related to whether or not they continue to improve stimulus and keep pushing that forward, and also what they do to common prosperity goals. I mean, none of that stuff goes away. So it does start to tone down some of that optimism. But certainly for the next 6 months, it's generally good news. And I think the key beneficiaries here is actually beyond China. It's actually the Asia, the almost Southeast Asia key trade partners for China. So from an asset allocation perspective, we are looking at Asia a lot more. We are increasing exposure to places like Korea, Thailand, Malaysia. Those areas we think will benefit more. And Europe to some extent, as long as that growth rate for China is really sustained.
Can we talk about that? Just the miners that have absolutely ripped. We had a guest on yesterday talking about the likes of Rio. Rio's had a massive, massive monster rally off the lows of last year. Not just the miners, but also the banks as well. Seema, are there some sustainable tailwinds behind that rally? Or is that just a big bear market squeeze?
No, look, I think that when you look at the China story, inevitably you have to bring commodities into it. And as I said, I think the 6 months is great. Beyond there is a little bit more difficult to predict. I mean, I should say the kind of 6 month to 1 year horizon. Now, when it comes to the commodity space, because of that real uncertainty of the near term, you bring in geopolitics, you bring in supply pressures, and there's so many dynamics can really be disruptive for a near term view that we take more of a long term perspective. For that, we are still very positive, and anything that comes through in the near term from China, which is pushing commodity prices up, is a bonus. But certainly for us, it's a long term story that we're looking at.
Seema Shah, Principal Asset Management. Seema, thank you. Wonderful to catch up. I think it was Chris Ferrone yesterday, wasn't it? Over at Strategas, looking at Rio. He's been looking at Rio the last couple of months, and just to give you a feel of that, Rio off the lows of October. From the end of October, we've rallied almost 40% on that miner.
Yeah, and
the chart's unbelievable.
Yeah, the place to look here is Australia. I mean, I think it's not a secret to anybody. I'm with Seema. China opening of China means a Pacific Rim pop. I mean, as simple as that. And what's great about the miners and what's called the beta, their ability to move when they move, they're a small section for us. But, we make jokes about the Dorchester Bar and LME and all that.
It's a big deal for London.
Globally, it's a big deal.
Big deal for the
Big deal in London and big deal for a lot of the southern hemisphere. I mean, you look at Australia and you go from Sydney out to Perth. I mean, it's not what we think. You've got to go north of Perth to get to Rio, to get to BHP, to get to Broken Hill Properties.
Why do you pronounce it like that?
My mother did that. She read all of Neville Shute and years ago, including the classic On the Beach, and she would sit there and lecture us on Broken Hill Properties out by Adelaide, and then a town like Alice and all that, and then you go up from Perth up to where their other mines were.
Have you ever been to Perth?
No.
Why do you say it like
I've
that?
never been. I'm supposed to go to Sydney. I mean, Bloomberg's supposed to send me to Sydney, and they go, no,
It
you
didn't
got.
work out.
I get to Singapore, and they go, come home, come home.
They're beautiful cities in Australia.
Yeah.
Very nice. Caterpillar, all-time high.
Yeah.
Cat's at an all-time high. It's
Have
had
you
a
been to
rally-
Australia?
I have, yeah. Brisbane, Sydney, sure.
I would just go to Brisbane to see the Veronicas. I mean, I don't know, I'd love to see him in a club in Brisbane.
We'll get you over to the Gold Coast.
We should.
Yeah, we'll make that.
you could see me
The
there.
surveillance tour's going on a while, isn't it? Several stops. We start in Shanghai. We're going down to Brisbane.
We got a countdown clock, and they're going to de-emphasize the clock.
I think that's
here in
our
a
career,
moment.
Tom. 1 hour, 20 minutes to
very,
go.
Very, very true.
1 hour, 20 minutes to go until the inflation report in America. Futures look like this on the S&P 500, just about positive by 1/10%. Yields coming back in by a couple of basis points on a 10-year at the moment. Your 10-year, let's have a look, 352 on a 10-year right now.
Tom Waits nailed it, Wall Street.
You want to sing us out?
Wall Street.
Be careful. Look at the clock. You've got 90 seconds left to sing if you want to go. People were tuning in this morning thinking this was going to be a super serious show going into CPI. I got a message a little bit earlier, Tom.
Tom Trabert's Blues.
You'll love this. We need Bramo. There's too much optimism right now.
It's true. It's true. We don't editorialize here, but I'm in Neil Dudda's camp.
Are you really?
Yeah. I am sick and tired of the gloom. I look at China. I mean, it's on cue. Come on, John. China's going to roll over and die. They had a party congress in November. On a calendar date, boom, let's fix COVID, and off we go.
I'm in a cheap seat. I don't have to make a call, so I'm not making a call. It's the third year of pandemic economics. Every time we thought we knew what was going to happen, something else happened. We've had more than 400 basis points of tightening from the Federal Reserve, QT on top of that. The ECB is going to keep on going. So on the one hand, you've got the ramifications, consequences of that, and then you layer on top China kicking back in. Who knows what that's going to look like?
Back to 2008 when we did not use a countdown clock. Bring it up right now. This is a LIBOR chart. This was a Bloomberg Red Sticky moments ago. You see it first. Bloomberg reports the 3-month LIBOR, the benchmark that you saw in 2008, we return to that level on LIBOR. We're 4.6 standard deviations on 3-month U.S. LIBOR. John, that is a foundational statistic for Michael Pond, Ira Jersey, and fixed income.
We'll continue the conversation. David Kelly, the Chief Global Strategist at JP Morgan Asset Management, coming up.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Investors and the Federal Reserve will be looking closely at today's U.S. Consumer Price Index. The projected 5.7% increase would be well above the Fed's goal. That would help explain its intention of keeping higher interest rates for longer. But the year-over-year price growth would also show moderation. That CPI is due out 8:30 New York time. The UK and the European Union are preparing to enter an intense phase of negotiations to end their dispute over Brexit. The talks are set to begin next week. The disagreement has to do with trade. Both sides originally agreed to allow Northern Ireland to remain in the bloc's custom arrangements. So far, the UK has failed to implement parts of the accord. President Biden's efforts to quell a controversy over classified documents in his private possession has become more difficult. Aides have found a second set of papers. Now, that's likely to fuel criticism from Republicans, even though they dismiss more serious accusations against former President Trump. More than 7,000 striking nurses at 2 New York City hospitals will return to work today after reaching tentative deals. Union leaders say the workers at Montefiore Medical Center and Mount Sinai Hospital will see pay raises and improved working conditions. The strike began Monday morning after 4 months of contract negotiations fell through. And Subway is exploring a potential sale that would value the sandwich chain at more than $10 billion. Sources tell Bloomberg the process is still in the early stages and privately held company could decide against it. Subway is one of the world's largest quick-service restaurant chains with about 37,000 locations, but its rapid growth has been tapering off. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
David Rosenberg out on Twitter.
Best in class.
Oh, this is punchy. Take a listen to this. Just as rents and good prices start to deflate, Powell decides his favourite inflation measure excludes products and shelter. He is now targeting less than 30% of the CPI. David asks why. Answers his own question, because he needs ammo to tighten further into the longest, steepest yield curve inversion since 1981. It's pretty punchy stuff.
There's a history to this, folks. The advantage of watching surveillance. When he was at Merrill Lynch, opinionated, worshipped by the revenue producing team at Merrill Lynch. He would do an inflation report, John, and on the right side of the paper, he would have the subsets of inflation. I'm going to tell you 30, if not 40 subsets of inflation, and he would slice and dice them, which is what America, represented by Merrill Lynch, was living. That's the Rosenberg that's talking right there.
Super odd to me that only a few months ago Chairman Powell implied there was no space for nuance, and now it's just tons of nuance every single day. Go back to Jackson Hole. That was no nuance, right? And now it's nuance. We're doing Supercore today, stripping it all out, this, that, and the other. What do you want to do? What are you looking for?
I'm reaching down here.
For what?
That's where I keep the tang, you know. I mean,
what's down there?
I'm going to try to reach down here without letting know. It's very important. I'm going to undo this right now. I mean, we're doing this here, and Amory Horton will understand this. You're going to get me in trouble.
On radio.
So I'm going to put the surveillance cork in my mouth.
That's a big cork as well.
That's a big one.
You bought corks? Is that what you bought? Is that what's in the box?
I didn't buy these. Anne-Marie shipped them up to me.
Did AMA send you that?
Yeah, this one's a little big. I'll have to look for a little one. Oh.
That's yeah. I can't say. Right, okay, let me reset with the market check before I absolutely die with laughter.
I'm going to, but on inflation, I'm not going to end here. Come on, David Rosenberg is dead on.
Anything you're about to say seriously, just take a beat.
No.
The futures on the S&P up by about 1/10%. Inflation data, 1 hour, 11 minutes and 24 seconds away. Yields lower by a basis point. Tom, your 10-year, 352.43.
Okay, Amory Horton joins us right now. Amory, let's cut to the chase. And I thought Karen Tumulty on what they did right, the 20 Republican renegades, was great, going back to the foundation of the nation. It's about passing laws. There's a primal scream out there about inflation right now. Forget about all the surveillance mumbo jumbo. Inflation's 6%, and they're saying to Congress, do something. What are they going to do?
Well, you're going to have actually the House Republicans introducing a bill about reining in inflation. This is really something that's going to target the Biden administration. Republicans continuously go after the Biden administration for the American Rescue Package because it sent out those checks to individuals who were, many of which were still collecting paychecks, and they said this only fueled inflation. So there's going to be a number of measures on the House side, but remember, this is gridlock in Washington, so it's not going to pass the Senate. So there's a number of issues that Republicans are going to do because obviously they have the power in the House, but it's not going to actually make it through Congress. But, Tom, I would say I would agree with what you said in the prior hour. Not that I think the administration has the data beforehand and the president's seen the numbers, but they obviously think today's print is going to be in their favor. And what they can show is that inflation is coming down, and at the same time, they have a strong labor market with a 3.5% unemployment rate. That is a very good sign for a president. But I imagine when the president speaks today at 10 a.m., he's also going to say, which he always does, is that more needs to be done when it comes to inflation. Because until everyday Americans go out and don't have to think about the price of groceries, of gasoline, which obviously we've seen come down, but really groceries and some services, then they can really, that's the only time they can really claim victory.
It's fascinating to me how it fits into the advisors to the president. Now, we've got a re-up of Treasury Secretary Yellen, right? That was reported a few days ago.
Yes, that was a Bloomberg scoop.
What advice is he getting on inflation? It's just as simple as that.
It's a great question. I think there's a lot of different people in the president's ears. I mean, he has a wide variety of individuals he talks to, including, I don't know why you're laughing, but including Larry Summers, we know that he calls. He obviously has Treasury Secretary Yellen, which you mentioned she plans to stay through, and Biden has asked her to, especially as this year is going to be some difficult legislation like the debt ceiling to get through a divided Congress. He also takes input from people he meets on the street in Delaware, soccer moms, when he's out and about on his weekends and at home. Also, he calls up CEOs like Brian Moynihan, like the head of Walmart. He wants to get information on what consumers are facing from a wide variety of individuals, not just those think tankers or individuals in the West Wing.
Just to be clear, laughing because Tom keeps bringing out this box of corks. I have no idea where they came from.
Some fan sent it.
Someone actually sent
Somebody
that to you.
sent me a box of corks when I say put a cork in my mouth.
That was actually
well, the hate mail's
mail.
assumed, yeah.
That's brutal.
Well, you know.
AMH, you mentioned Secretary Yellen. Can we finish there? So Josh Wingrove did some reporting on this. Can you tell me, Anne-Marie, Josh and I were talking about this yesterday. I think it's important. Is it a big factor that we've got this debt ceiling debate coming up later this year, and he wanted someone, dare I say, almost apolitical, running Treasury, someone who was a little bit more focused on the economic side of things and maybe not really interested in some of the politics in the way some other people are?
I think it's obvious that Secretary Yellen doesn't like the politics, right? She is an academic. She was the Fed chair. This is very much so something, almost how she runs the Treasury is how she was a Fed chair, right? She looks at the data. She's very honest when she gives answers, which I think at times has gotten her into some political trouble and some political heat. But now it's going to be very tough negotiations with Congress to raise the debt ceiling. And this is something that, you know, the administration probably looks at her, who could be seen on both sides of the aisle as an academic, someone taken very seriously, even if you don't agree that of her politics sometimes or how she views the economy, they do have a lot of respect for her. So at this difficult year in terms of raising the debt ceiling, and also they're going to have to, you know, find a budget somehow to keep the government running, they think that she's the safest pair of hands.
Can't believe we're doing this all over again, Tom. All over again.
Well,
AMH down in
we're gonna be
DC,
there
Anne-Marie,
30
thank
days
you.
From now. I mean, the trend is in place. There's no question goods has come back. Services is maybe barely rolling over. There's a lot of questions of things. Ed Hyman looks at history at Evercore ISI and says we're going to plunge down 3%. I think he's got a shocking. Was just on talking about a sub 2% yield? Was that Michael Pond?
Michael Pond, potentially getting back below 2% on inflation.
In the defense of the Fed, they're moving fast. Where I take issue, which is why we were laughing about the stupid cork in the mouth, is I'm sorry, we forget with all our mumbo jumbo and bow tie talk, this is killing people right now. The nurses I see striking on 3rd Avenue at one of America's #1 hospitals are no different than the strikes in your United Kingdom.
Sure.
People are getting hammered.
You mentioned Japan a little bit earlier. I mentioned that survey from the BOJ. It's the BOJ's own survey. More than half of Japanese households said their livelihoods have worsened. 53% of households. That's the worst read we've seen since 2010.
And I'm making it up as I go. Somebody correct me. U.S., 6% inflation is painful, given that, as Ned Phelps would say, our dynamism. Okay? Europe, it's a lower number, 4%. Japan's way low. Anything over, off the top of my head, 1.5% inflation, that crushes the people of Japan. They're there right now.
And not so long ago, this was the goal. Over in Japan, this was the objective.
Absolutely, to reflate. Oh, absolutely.
Yeah, and
no
it's
question
happened.
about it.
And now what?
Well, Citigroup says they will abolish Citigroup, Mr. Murashima.
YCC's going. That's the call.
They mince no words. They will abolish YCC under Kuroda. How do you publish that if you don't know it? I mean, they've got to have an inside knowledge.
There's a local news report today in Japan suggesting there will be a rethink, maybe as soon as next week. That's a local news report. I've got no idea.
Did I ever think an inflation report would be as interesting as Jobs Day? I never really.
That's been a story for the last 12 months.
Yeah.
Maybe longer, the last 18 months.
It's amazing.
And will be maybe for the next 6. And that's the challenge for this Fed. The one in the future that hasn't happened yet. What happens when unemployment starts climbing? Hasn't yet. 3.5%. 3.5%. And people talking about the immaculate disinflation. We're on course for a soft landing. The Fed's getting it done.
Well, you know what's good?
We'll see.
We have Torsten Slok coming up. That's a good thing.
He's fantastic. Of Apollo, with us next on this program. Equity futures right now up a little more than 1/10 of 1%. This is Bloomberg. Inflation data in America, 60 minutes away. Going into it, equity futures look like this on the S&P 500, firmer by just 1/10 of 1% and looking to build on the gains over the previous 2 days. Can we do that? Well, the fate of this market, at least for today, dictated by what happens in 60 minutes when we get inflation. In the bond market, 2s, 10s and 30s look a little something like this. Your 10-year yield lower by 2 basis points to 352.25 on a 2-year yield, just a little bit higher by half a basis point, 422 on a 2-year yield this morning. What a finish on copper. Just some massive calls coming through. We're through 9,000 on copper. We did that yesterday. Just for you, Tom.
Thank you.
Goldman's Jeff Curry, 11,500 in copper this year, off the back of Goldman, making a call that China reopening is going to deliver a big, big boom in this commodity market. We're down about 0.4% on the day, Tom, but that's quite a call. And that has to be a factor in the conversation around the inflation story this morning. If we get a softening, if we get more goods disinflation, does China and its reopening completely disrupt that theme in the months ahead?
And very importantly, this is a massive 4+ standard deviation move from -2 standard deviations way out over +2 standard deviations. Whether you're in Chicago or London, doesn't matter. This is copper vaulting higher.
There's a pretty tight consensus for expectations a little bit later this morning. You've got the headline year-over-year stuff, but the banks on Wall Street very focused on the month-over-month core, and maybe for many of you as well, the super core, which we can talk about later. These big banks out with their calls, JP Morgan, Citi, Morgan Stanley, Goldman, all forecasting something like a 0.3% increase in core inflation, Tom, month over month.
It's going to be interesting to see. Our team has done a great job of preparing you for this important inflation report. Michael Pond of Barclays, definitive on inflation-linked debt. Right now, Torsten Slok with us to say he's chief economist at Apollo, his service to Deutsche Bank over the years. And Dr. Hooper, well, guess what? He's been on fire with blistering notes the last couple days. And Torsten, to wax theoretical, as Chairman Powell did, I believe, in the last press conference, throwing out Okins, throwing out Phillips, throwing out all these other theories. I don't know if you mentioned the Taylor model. Wages is what matters to Michael Pond at Barclays. Wages matters to you, and that's a Phillips curve analysis. Is it dated, ancient, and to be forgotten?
Well, the issue today is that the economic models will tell you that we need demand destruction to get inflation to come down. In other words, we need a much higher unemployment rate. But the problem is, maybe inflation today is not driven by demand. Maybe inflation to some degree, and maybe to a large degree, as some Fed working papers show, is actually driven by supply. So maybe we don't need that much more demand destruction. Maybe we just need time to sort out the problems with the supply chains. Maybe we just need time to sort out some of the issues on the supply side. So there's a very important link missing in the Phillips curve and in the economic frameworks that I'm using, that the profession is using, that the Fed is using, which is basically saying that there's a lot of focus on demand destruction being needed to get inflation to come down. But so far, and this is really important, remember inflation peaked at 9.1 in June, now down to 7.1. And if I look at ECFC Go, we'll get 6.5 today on headline inflation. If that's the case, well, then we're trending lower without the unemployment rate going up. So far, it looks more like a soft landing because we're not having that significant increase in the unemployment rate that the Phillips curve would have predicted.
Do we have a trend and an inertial force, to doing physics envy here, do we have an inertial force to get us where Ed Hyman says we're going, which is sub 3% inflation? Does the vector push us down quickly, or do we sit here for a while?
See, that's the key question, and I don't think anyone knows the answer to that. But if we were the Fed, I think we would say, okay, we don't know what the answer really is.
We like to pretend we're the Fed. Continue.
But why don't we just remain hawkish to make sure that we go in that direction? And then we'll remain hawkish as much as is needed until we get down to 2, 3, maybe even 4. And then we can start to take the foot off the brake.
Slok, edge of Blanchard there.
You know, wants a seat at the Fed. I'm not suggesting you want a seat at the Fed. Does China ruin all of this?
So the main issue really is that, as you know, of course, all too well, it used to be the case that households in China used to be at home involuntarily. Now, with the virus raging, a lot of households are staying at home voluntarily. So that means that we have not seen, if I look at the CRB index, that has not been moving higher. Commodity prices are not moving higher, as they should have if the China reopening was going to be a big deal for commodities. So at least up to this point, the conclusion must be that it's probably going to be a more drawn-out experience where throughout this year, we will probably get some lift in growth, some lift in inflation. But at this point, at least, it's still the case, even though it has been announced. If it was the case that we had a significant reopening announcement, then commodity prices should be going up. But now they're actually still going down.
The chairman says we're not as restrictive, sufficiently restrictive at the Federal Reserve. Do you think we are?
Well, that still also remains to be seen. I mean, we have raised the Fed funds rate at the fastest rate basically ever. So we don't really know very well. There's a lot of debate also in Fed papers about has the transmission mechanism of monetary policy shortened. There was a Kansas City Fed paper that said, well, it probably has shortened because now they also have forward guidance and the balance sheet. But at the same time, we're not really seeing anything outside the interest rate sensitive components of GDP slowing down. So housing is slowing down, autos, durable goods. But those are the interest rate sensitive components. But they only make up about 20% of GDP. The 80% of GDP, which is airlines, which is hotels, which is restaurants, everything from concerts, sporting events, it's still red hot. So there's just not much sign still quite of a slowdown in the service sector.
I can't imagine the first report you wrote where you knew David Folkerts Landau would read it. He owns the high ground on flows. What's the flow worry out there that we don't see coming right now, given price change? Spain, France, United Kingdom, Japan, China. There's got to be not a rate story, but a flow story that we don't see coming. What is it?
Well, there's a lot of policy things going on globally on yield curve control, as you, of course, have talked about extensively. And what does that mean? That they have widened the band a little bit? Is more coming? And what might that mean going forward for future BOJ policy? Also in Europe, it has turned out now that we still will likely have a recession, but it has turned out in more recent data that it was not quite as bad as we had feared. But nevertheless, Europe still needs to go through energy transition. And finally, to your question, let's not forget the debt ceiling this summer. That certainly is also something.
You think that's a legit point of study?
So I think that one risk and one worry that one could have is start to think about, are the risks of downgrades of U.S. sovereign debt? I don't think that's likely, but we're definitely seeing some risks over there in terms of what that might mean in terms of more volatility in markets over the coming quarters.
How do you respond to people micro-analyzing what we're going to see here in 53 minutes, 31 seconds? Oh my, OMG. Eggs, CPI, eggs are outrageously expensive. How should our audiences react to that?
So I would think mainly in terms of goods and services. It's not surprising that goods is slowing down because that's partly also again interest rate sensitive components, and also that China has been so weak and we haven't seen commodity prices go up. So that's why goods have been slowing. So I think a very important place to look in the CPI report is still to look at services, and perhaps most importantly to look at owner's equivalent rent and all the housing parts of the CPI, because we are all waiting for that to roll over, and Jay Powell has said very clearly we should expect that to roll over. But services is really the area that is most rigid in terms of it takes time before that starts coming down, and the sooner that comes down, the quicker the Fed will turn from this very hawkish stance to a more neutral stance.
How good are we at measuring shadow costs in these inflation prints?
Not very good, because also remember our textbook, as we spoke about with the Phillips curve, doesn't really take into account what is inside the CPI basket. And the CPI basket only, some areas that are directly a function of wages, which is a big issue at the moment, really are relatively limited to only 25-30%. So in that sense, we're not very good at measuring what the shadow costs are and what's actually going on out there in the economy.
Isn't that a bit messy? Ridiculous almost. Well, we're chasing numbers that aren't really backed up by anything.
But the Fed and the ECB just have to live with that and say we just have to work with what we got. And obviously, therefore, we all look, and they look much more than anyone else, at all kinds of other data for evidence of inflation. Is it coming down? And it is coming down. Average hourly earnings last Friday is still trending lower to now 4.6 in December. But it's still the case that the level of inflation, which is what the Fed focuses on, and this is very important, the Fed focuses on the level of inflation, but we in markets, we focus on the direction of travel and saying, hey, it's going down. So maybe I should be buying stocks, maybe I should be buying credit. But the Fed would say, no, don't do that, because the level at 7.1 where we are now is still too high.
The problem I have here, including the shock of ending World War II and even the tragedy of Europe before the Marshall Plan, is we have experience with high inflation, which usually, as Krugman's brought this up, and Hyman as well, and others, it comes in with a vengeance. Is that where we are right now?
Yeah, but what I think is also very important is that this whole episode will turn out to be transitory. But the reason why it's transitory is because the Fed reacted. So that's like saying that the patient survived because the patient got the right medication. In other words, we got the right medication from the Fed, and therefore inflation is coming down. So it will not become a prolonged period of high inflation.
How close are they to restrictive? Dominic Constant at Mizuho, just outstanding in his synthesis. He says we're edge is super restrictive right now. Are we? LIBOR back to 2008?
Yeah, so the key answer to that question is the R star, and where is the level of the equilibrium exchange rate for the Fed, and that we are definitely above that level today, and that's about 2.5 or so. So in that sense, we are absolutely in restrictive territory. So that also means, as the forward curve on the OIS is telling me, that we should expect to see the Fed begin to cut rates, maybe not in the third quarter, but definitely, in my view, in the fourth quarter or going into next year, because we are in restrictive territory and we need to get back to that R-style level, as much as there are some issues about how that's measured, at around 2.5.
You're smiling. Why are you smiling?
I'm absolutely
hate this rate cut chat, don't you?
Fascinated where we are, and the wonderful Torsten Slok is put into a position where he's got to game out what's going to be solved by ex post. And what's going to be solved by is R and R starred and the presumed growth rate, G. We're doing the algebra here, folks. It's Algebra Thursday. Stay with us. And the answer here is we've had, as Blanchard and others talk about Stiglitz, we've had R minus G, which has been a gift for 15 years. Is that gift over?
So I do think that it's over in the sense that we will not have the Fed funds rate go back to zero. When at least when I think about what is coming after we have been through this cycle and inflation is back again, then I do think that we will have a new regime where the level of the Fed funds rate will not be zero anytime soon. It will be closer, and this is what I'm guessing the Fed working papers are telling us, be closer to the R-star level of around 2.5.
You mentioned T. Can I finish on T?
Please.
Transitory. I don't want to let that slide. What is it about this moment that you just think is temporary, that you think doesn't stick? Because a lot of people do think we've moved into a higher inflation regime, that we've left behind the pre-pandemic years. Why do you think we haven't?
So the first, of course, thing is that the New York Fed just published a blog post saying that inflation persistence is actually coming down faster. So the first observation is we are seeing inflation persistence improve quicker. But to your point, I do think that eventually a lot of these things will work themselves out, both if the supply chains fix themselves and also if we are in more restrictive territory. That means that demand destruction, which is both in the pipeline, has already happened, will continue to get us back to the 2.5%. So I do think that the reason why it's transitory ultimately is because the Fed wants it to be transitory.
At the espresso bar at Davos, this guy just holds court. When he was at Deutsche Bank, he just holds. You should see this
You
guy
hold court
the room
somewhere
at the
else
espresso
in
bar.
Davos, and it's not.
Yeah,
the
well, I'm
espresso
sure
bar.
Apollo's de-emphasizing it. So maybe
It was the piano
Are you going to
bar.
be at Davos?
No, I will not. Are you going next week?
We haven't decided yet. We're thinking about it. But the answer is Torsten Slak.
I thought we had decided.
That was a clinic. That was a clinic that you just heard from Torsten Slak.
Have you not decided yet?
Huh?
Have you still not
I just
decided?
can't decide.
I've made a decision. I'll announce that tomorrow.
I told him I'm not going unless I can bring vet bill.
Oh, you wanted the dog to come and a photographer.
Well, I want the dogs to come
and a photographer.
And the photographers are, that's part of the entourage.
Torsten, a clinic. Thanks for your perspective.
Brilliant.
Thank you, sir.
Just
and great
brilliant.
notes recently, by the way. Thanks for sending them across.
Oh,
really enjoyed them. Torsten
He's on
Slok there
fire.
of Apollo. Inflation data, 47 minutes away.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Traders are betting that U.S. inflation is cooling. That would reduce pressure for aggressive rate hikes from the Federal Reserve. We'll get the latest consumer price index at 8:30 New York time. The projected 5.7% increase would be well above the Fed's goal, but the year-over-year price growth would also show moderation. The U.S. and Japan are taking steps to counter the growing challenge posed by China and its ties with Russia. They announced plans to strengthen defense cooperation on land, at sea, and in space. The U.S. plans to reorganize its forces in Japan so it can deter and respond better to increasing regional threats. Bloomberg's learned that a corrupted file led to the breakdown of an air safety system that prompted flights to be grounded across the U.S. Both the system that provides critical information to pilots and its backup failed. Almost 10,000 flights were delayed. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Deflation of the dollar here, or the popping of the dollar bubble, I think is a very big story for 2023 and beyond. Now, in the short term, I would say dollar is very oversold here. It would not surprise me to see it bounce. We're going to put in what I would call, in my world, a right shoulder in the dollar. I would be a seller of dollar strength.
Chris Verone was absolutely brilliant yesterday, joining us from Strategas, a bad company. Live from New York this morning, we're counting you down to the inflation data in America at 8:30 Eastern Time, which is about 43 minutes away. Your equity market going into it looks like this, up 0.2% on the S&P. Yields come in about a basis point. Your 10-year, 352.43. In the FX market, euro dollar 107.57. Monster yen strength today. Dollar yen moving lower by 1 percentage point off the back of a report that Japan, a local news report on the idea that Japan may be backing away, Tom, from a policy review, or rather introducing a policy review for next week.
To frame this out for those not keeping score, 150, 140, we went rapidly down to 132. We visited 129 for a spot of green tea, and then back up we came, and now we come down. We haven't tested those yen strengths that we saw weeks ago.
And now there's talk of backing away from yield curve control even more, maybe even completely over a city. China reopening is a big factor for all of us coming into 2023. I know it is for you at home as well. Here's a call from Eric Nelson of Wells Fargo. On the dollar, on the back of this reopening in China, we recommend buying Aussie dollar on dips, targeting a tactical gain of about 4%. The dollar should soften broadly over the next few weeks. Tom, that's a 1-month call, 4%.
Well, these are big moves. No, I'm glad you put this up, John. And this is really important. We're not talking about little tweaks here. A lot of different Wall Street FX types are looking at demonstrable big figure moves.
Tactical is the key word here. Tactical. Are these tailwinds behind some of these moves sustainable? This rally we're seeing in EM equities, bull market, the rally we're seeing in base metals, copper through 9K, Goldman saying 11,500 maybe later this year.
Sterling cast right now. Let's dive forward the conversation as we did. I thought Torsten Slack, how good was he of Apollo? Just brilliant. Awesome. Really, really fancy.
I don't think you have to agree with him to think he's great. He's great. It's just fantastic perspective.
No, it's good. It's been really good.
Great notes he's put out recently.
Michael Pond, maybe sub 2% yield. We continue with Eric Nelson. He's macro strategist at Wells Fargo. And what he brings to this is really serious mathematical panache from Wake Forest and from Johns Hopkins University. Let's look out on the right side of the equation. We're living here in 45 minutes, Eric, and that is the epsilon, the uncertainty out there. What's our level of belief in the data this morning at 8:30?
Well, Tom, we've had two pretty soft CPI numbers the past 2 months. So to see a third one this month would, I think, give the Fed a little bit of comfort coming into the next meeting and perhaps going 25 basis points. I still think, though, the bigger question is the employment cost index at the end of this month. Powell's been very focused on wages, core services, excluding shelter. So I really think the wages are going to have to come in on the soft side or maybe even on consensus for the Fed to be comfortable going 25 basis points. And so abstracting from today's reaction, which could be choppy given the positioning, do think the dollar can continue to soften here over the next month or two.
Well, maybe there's a dollar dynamic to it, but let's stay there on the employment cost statistics coming out in a number of weeks. That's wages and benefits. The Wells Fargo's got a real knowledge base on this with your countrywide heritage. What is the dynamic of pure wages and benefits right now?
Well, I suspect the number that the Fed's going to be really focused on is that private wage number. And of course, we've had the average hourly earning numbers that have come in a little bit on the soft side, that nice downward revision last month. But the key with the ECI numbers is that it's composition adjusted, Tom, as you well know. This is something we're looking at within jobs. What are workers seeing? And that's why the Fed likes to focus on it so much. Now, we have seen a little bit of softness from Q2 to Q3. Question is, did that softness continue or did we see a real acceleration? I think that a reacceleration would really spook the Fed, given what they're really focused on here, and that is the very low unemployment rate and the very high level of vacancies.
Eric, I'm looking at your dollar call. It's a tactical call. It's a short-term call. You seem to be cautious about the durability of this, Eric. Can you run me through just why you don't think some of this dollar weakness can hold?
Absolutely, John. To me, it's so much of it is a function of the incredible policy tightening we've had over the last year. The still very significant cost of living squeeze in places like Europe and the UK. I do think that there's been a little bit more optimism than I would expect around the sort of durability of the economic recovery here, and the fact that maybe we can put this sort of energy shock and the interest rate shock behind us. I'm not so convinced. So I still do worry a little bit about global growth over the next 3 to 6 months and beyond. About some of the persistent structural issues in China. Those may be rearing their head again. Need to see more evidence that the global economy can withstand this rate and energy shock before I'm convinced the dollar is heading lower on a more sustainable basis.
Eric, this line you've got, China reopening could be less supportive of CNH over time. Eric, run me through the thinking there.
Yeah, John, this is really a capital flows story. So we've obviously seen a lot of optimism around China reopening. looking at the Hang Seng or the Golden Dragon indices, these have rallied a lot. And, that's great in the short term. But to me, the bigger issue here is, are we going to see a longer term return of capital to China after what happened last year? I'm not so convinced there. And then maybe more fundamentally on the current account side, you're looking at a lot more tourism outflows. You're looking at a lot more probably goods imports and fewer goods exports as the global economy rolls over here. So to me, that's a pretty negative cocktail for the Chinese currency.
On the dollar dynamics, there's a lot of bets being played right now. And John mentioned a 4% move that we're looking at now. In foreign exchange, is it a big figure 2023? Can you make a legitimate bet?
Well, you certainly have to watch dollar yen, Tom. I know that's been something you've been talking about this morning. If the BOJ were to move policy again, you could certainly see several big figures in a very short space of time. I do worry, though, that the market is maybe a little bit too excited about a successive set of moves from the BOJ. So, for them to come out in December, change policy, and then say, we're done for a while, this is not normalization, and then do another move, they really risk destabilizing the JGB market and dollar yen. I don't think they want to do that. So I do think coming into next week, dollar yen has actually some upside risk if the BOJ disappoints.
Eric Nelson of Wells Fargo. Eric, thank you. Big call there on a variety of markets, Tom, including the Aussie. Just on the end there, on the Japanese yen. Maybe they disappoint. There's speculation this morning. Yeah. And it's a major move. Let's be clear. I say major. It's a big move relative to what's happening elsewhere. It's a snooze in G10 this morning. But if you look at the dollar against the Japanese yen, 130.71, it's a move of 1.3%. It's a move. And, Tom, it's off the back of this local news report that maybe we get this policy review over at the BOJ next week.
You get 5 years of stasis, I'm going to call it, at a 110 level. The moving average mark is exactly a 108-ish. And so up you go 108 to 150, weak yen. And you come down, and we've only come down about a third of the way. So they got a lot of room to do to, quote unquote, get back to normal on yen. I'm not predicting a 108, but I'm just saying technically that's sort of the break point of when they surged higher.
Normal is an interesting word. Can we get back to normal in the JGB market anytime soon?
No.
The amount of distortion we've had there for the amount of time, it's just been years and years and years of this now. I'm looking at the 10-year JGB at the moment. We've got this new threshold over at the BOJ in the last month or so. It's just 50 basis points, and we're just bumping right up against it, just right up against it at the moment. I think for a lot of people who want to express that yield curve control view, they're not doing it through the bond market, which is heavily distorted and manipulated by the BOJ. They're doing it through foreign exchange.
Yes, I agree with that strongly, that they're using the deepest, biggest playground to play in because of the liquidity, because of the visibility that you've completely lost within not only in foreign exchange, but in Japan foreign exchange, but in others as well. How come both you and I lean forward when Rosenberg publishes? I mean, that's what you do.
What's he said now?
I don't know. I haven't read it yet. All eyes on today's CPI report. The whisper is that it will be soft, which may help to explain the rally of late. That's just a little blurb there from Mr. Rosenberg getting ready here 30 minutes away.
Without a doubt, this market has been looking for a soft print in this report. That report is about 34 minutes away. Just to go through the estimates for you, your headline number, so this is headline year over year, CPI, we're looking for 6.5%. That's the median estimate. The previous number was 7.1. As I've said a few times, a lot of people on Wall Street very focused on the month-over-month core figure, just to try and establish a trend here. Ex-food, ex-energy, month-over-month, the estimate 0.3%. The previous read 0.2, and then Mike McKee gets fancy quickly, starts stripping all kinds of things out.
He had his morning workout. He's ready.
He said it's not super core. He said it's Powell core.
I like that. I did not know that.
Powell core.
That's very good. He talks to you more than me. He doesn't talk to me.
Because I'm a friendly guy, Tom. Yeah, you're a little bristly sometimes.
He sent me the corks.
Did he? David Kelly of JP Morgan Asset Management coming up next.
Fed is really focused on some of the stickier measures of inflation.
They turned out to fall way behind the inflation curve, and I think they're trying to make up for that mistake.
We have this combination of growth prospects improving, but central banks tightening to keep inflation down.
That trade-off between inflation and the U.S. labor market is always going to be in place.
We're kind of moving totally out of the inflation regime. We're moving into something new.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz on assignment. Tom Keene, a most important 30 minutes here to go to an inflation report of the United States of America. Much to talk about. Great guest this morning. Vincent Reinhart, the former head of research for the Fed, will be with us in this hour to slice and dice this report. John, simply, why is CPI now so important?
Has been for the last 18 months. It's what the Fed is targeting, and they want it lower, much lower. Will we get another shift lower today? We're expecting that on headline. A lot of people focused on month-over-month call. We'll discuss that. The number drops in 29 minutes. And will this set us up for another downshift step down over at the Federal Reserve to 25 basis points?
Let me go to that right now. I'm going to do it here in the Bloomberg terminal. FOMC go, because, John, is this report at 8:30 about February 1, or is it about March 22nd, or even the May 3rd meeting?
I don't think they can make decisions about what happens beyond February 1st just yet, but I certainly think
Agree.
it could set
Strongly
us up
agree.
for 25. The Boston Fed President, Susan Collins, was speaking to Gina Smilik over at the New York Times just yesterday. She's leaning towards 25. Others might lean towards 50. It'd be nice to finally see some division on the FOMC, wouldn't it, Tom? Given that the outlook is pretty difficult to make at the moment, at least 1 year out.
I want to fold the market into this because we're moving today. We've spent a lot of time on Japan. John, moments ago, SPX prints 4,000 on futures. Standard & Poor's futures up 11. Yes, they were there the middle of December, but this S&P 4,000 is a different 4,000 than 30 days ago.
So the consensus was first half dip, second half rip.
That worked.
Remember that? And all of a
Rip
sudden,
and dip, or
just to be
dip and
clear
rip.
here,
I can't
it's
remember.
January 12th. It's January 12th, and we're already having a conversation about maybe some cracks in that consensus. And to be fair, when many of these outlooks were written, do you remember at the back end of October, in November, when all these people get round a table and start talking about the year ahead, we all said the big asterisk there was China reopening. And you needed two versions. One version, China's still closed. Another version, China reopening. And we're trying to work out what this all means. When that demand kicks back in, does it upset that disinflationary goods trend that we've seen more recently? I don't know.
I will go with that as being the elephant in the room. We've talked about this all morning. Look for Bloomberg Digital and YouTube to help you with that, folks, and the great conversations we've had. John, what I would emphasize is it's more than just China. And what I would look at is how corporations are adjusting, how people are adjusting, and we're adjusting at light speed to what seems to be a nascent disinflationary trend.
Well, how this market's adjusting too. The dire outlook on Europe. I mentioned the European banks. To see European banks,
40%,
banks,
40%
plus from the lows of the summer. I mean, these are huge, huge moves. And not just them, the miners as well. Rio, we had Chris Verona Strategas mentioned them. EM equities, high yield spreads in the United States. They're tightening. People are talking about recession in America, and high yield spreads are tighter, not wider.
Brent crude, $84 a barrel. I'm rounding it up there. Can you imagine Brent crude at 90.50? It's a different conversation.
Hey, Jeff Curry of Goldman.
We're
bullish.
not there yet.
They're looking for triple-digit crude.
Review copper. I think you've done a great job on that. I look at it sort of, but, Chicago shut down. LME is open, John.
Through 9K in the last 24 hours. Goldman, 11,500.
Yeah.
This year, potentially. It's a big move, Tom. And largely off the back of Chinese demand kicking back in, which is why I say, and I keep saying it, if you've got this outlook of disinflation, I get it. But does that get upset by what's about to take place in China? That's the unknown.
26 minutes away. I want to do a formal data check, John. I'm going to start with the Bloomberg Financial Conditions Index, still elevated, a positive, accommodative number, not what Chairman Powell wants.
Equity futures with a lift up by 1/3%. All this speculation last time around that just before the print there was a leak. Gone back and forth on that. Still no real clarity, Tom, as to what happened. Do you remember that? The seconds before the last inflation print where the market started to move on it before it even dropped. Let's hope we're getting none of that. Let's hope we're getting absolutely none of that.
That got some scrutiny. That got some follow-on scrutiny. I agree. There's no question, folks, on the green and the red of the terminal that we saw that as well. Foreign exchange has been front and center this morning. Yen is somewhat stabilized here, off the shock and the news.
Real yen strength. I mean, look, it's a 1.4% move on dollar yen, Tom. Maybe take a snapshot of G10 on the FX screen on the terminal, which is WCRS if anyone's interested.
Very good.
You just see this massive outperformance of the yen, Tom, against the US dollar, and everything else is pretty snoozy.
There it is. Michael McKee set to join us here in a bit. Vincent Reinhart with all of his expertise in a bit. But we start strong this hour with David Kelly. He's Chief Global Strategist, JP Morgan Asset Management. And with his academics in Ireland, I'm sorry, he brings an old world tinge to the new world this morning. Is it global disinflation, David Kelly?
Yes, I think it is. I think there's, even with China reopening, we've got softness in the US economy, we've got softness in the European economy. But more than that, we've had time. We had this spike in commodity prices in the middle of last year. We've seen that gives us time to increase production, to increase distribution, to reduce consumption. And even if we see a pickup in growth in the second quarter and later on this year in the world, I think that's given suppliers time to get commodities to market. And because of that, I don't expect much of an inflationary impulse out of a Chinese reopening. And I think the big story still is inflation coming down over the course of this year.
David, what are the chances that the Fed is done after February?
I don't think they are. I wish they would be. I think they need to stop. This is a war that they've won, and they're in danger of tipping the economy into recession. I think they're making the fiscal problem worse. So I wish they would be done. But no, I think the debate right now is 25 basis points on February 1st. If we get an at consensus number or a below consensus number today, then I think that locks in 25 basis points. But I think the way the Fed, the majority of the Fed are thinking about this is they want to go 25 in February, they want to go 25 in March, they want to go 25 on May 3rd, and then hold it through the end of the year. That's what they want to do. The question is, will the economy be strong enough to allow them hold rates at that relatively high level? I think we'll sort of see that as the year plays out.
What are we learning so far about that, David? Is it still too soon to draw any conclusions about how resilient this economy is?
It is. I mean, what we know for sure is the economy is going to be growing slowly. We're at full employment, and we've got very little demographic growth. We've got a very low saving rate, and I think that's a big problem because what's happened is consumers have been living beyond their means for the last few years because of government handouts. And if they sort of try to normalize that saving rate, if they stop increasing their borrowing as much, that's going to slow consumer spending. Meanwhile, we're getting sandwiched by a high dollar and by very weak residential construction, and that's going to slow the economy. So I think we get no more than about 1 to 1.5% growth at best. But we could still avoid a recession. I mean, we're on the edge of something here, but it looks more like a swamp than a cliff.
Yeah, this is really well said, the idea that we're on the edge of something. David Kelly, with all the ambiguities that we have now, I'm going to voice Neil Duddy here of Renaissance Macro, the idea that yes, growth may come down, yes, wage growth may come down, but if we disinflate, real incomes could be stable, or actually real incomes, inflation-adjusted incomes could increase. Is that feasible?
Yes, it is feasible, at least in terms of wage income. But you still don't have any, you still got the hangover of government transfers going away. And with the personal saving rate at 2.4% right now, remember it was 7% in the second half of the last decade. So you could have income growing faster consumer spending as that saving rate goes up and still have very weak consumption. So I think even with some income gains, we're going to have very weak consumption.
What is your call on housing? Is a broad statement, rents, OER, home ownership, etc.?
Yeah, I think we're already seeing rents crack. In fact, I think one of the many nefarious effects of this bonanza in terms of government stimulus during the pandemic is that it allowed landlords to increase rents on people who temporarily had the cash to pay them. But these people don't exist anymore. And so I think that's already pushing rents down. I think it'll push them down further. I just think that government data is very lagged on this in terms of inflation. But I think rents will slowly come down. I think single-family home building is going to be slow, but multifamilies continue to be pretty strong here. And remember, the housing industry never was booming. So even if it is in a slump here, it's not having the same impact on the economy as it did in the first decade of the century.
David Kelly of JP Morgan Asset Management. David, thank you, sir. Thank you very much. We are about 20 minutes away from CPI data in America, going into it. A bit of a lift on equity futures. Tom mentioned that a few moments ago. Equity futures up by 1/3% on the S&P 500. Yields look a little something like this in the bond market, lower by 3 basis points. Tom, at the moment, looking at a 10-year, just a little bit lower to about 350.
We haven't talked enough about the real yield, a 127 on the real yield. Real yield comes in with further curve inversion. I mean, as I said, the ambiguities, which is sort of microeconomic talk. Jeff Curry would probably give me a quality C at Chicago in microeconomics on that. But the bottom line, John, is it's a jumble. It's the whole thing now.
Hey, Tom.
20 minutes away is a jumble.
Third year of pandemic economics.
Yeah.
Every single time the consensus has got it wrong. Why would this year be any different? with China kicking back in.
Shout
No
out.
idea.
Yeah. Alexandra Harris just publishing, and who does she quote on the LIBOR news of LIBOR back to 2007?
Go on.
A real benchmark for the time of Tim Geithner and Secretary Paulson and that. Priya Misra. Priya Misra on LIBOR back to 2007. This is a real moment for global Wall Street. It is supposed to reflect bank funding costs. As reserves are falling, banks are paying up for funding. And I take what Ms. Misra, with all of her brilliance, is saying there to what's tomorrow after the inflation report. Bank earnings start. It will be fascinating.
JP Morgan, Bank of America, on to next week, I think Tuesday. Morgan Stanley, Goldman. Do you know who's coming up in the next hour? Priya Misra of TD.
I did not know that.
Yeah, looking forward to catching up with her.
Oh, this is the next hour. She's on radio or on TV?
On TV.
Oh, okay. Thank you.
9 a.m. Eastern Time with Jim Bianco, Bianco Research. Catching up with Jonathan Golub of Credit Suisse as well, around the opening bell at about 9:30 Eastern Time. Coming up on this programme, after the inflation data, we'll catch up with Vincent Reinhardt of Dreyfus and Mellon. Up next, Will Kennedy, Bloomberg's very own.
We have Will Kennedy in it.
Joining us on the studio, who heads our world-class commodity coverage. He's going to drop by the studio here in New York. And Mike McKee's going to give you the playbook on what to look for in this CPI print in about 18 minutes.
Yeah, Will Kennedy's like the Three Stooges. Cotton. You have no idea what I'm talking about.
What are you talking about?
Cotton.
I just want you to keep going.
Cotton.
What
Moleri
is this?
Curly.
Okay.
Cotton. Except copper.
You want to do that voice for copper?
Copper.
An oil?
Copper. It's my Curly imitation.
All right,
I can do this. You ready?
Are you done?
That's a lot of skill.
Our folks in radio do not want to see that. Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Well, Sam Bankman-Fried says don't blame him for the collapse of his FTX crypto exchange. In a blog post, Bankman-Fried blamed crashing markets and an attack from a rival. He wrote, quote, "I didn't steal funds and I certainly didn't stash billions away." Bankman-Fried has pleaded not guilty to fraud and campaign finance law charges. Investors and the Federal Reserve will be looking closely at today's U.S. Consumer Price Index. The projected 5.7% increase would be well above the Fed's goal. That would help explain its intention of keeping interest rates higher for longer. But the year-over-year price growth would also show moderation. The CPI is out less than 20 minutes from now. President Biden's efforts to quell a controversy over classified documents in his private possession has become more difficult. Aides have found a second set of papers, and that's likely to fuel criticism from Republicans, even though they dismiss more serious accusations against former President Trump. American Airlines posted preliminary fourth-quarter profit and revenue that beat estimates. The carrier was helped by robust holiday travel demand. Americans' results support large U.S. airlines' claims that the industry will continue its recovery from the pandemic in 2023. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
We have this combination of sort of a soft landing in the global economy. The worst case scenario didn't happen because natural gas prices in Europe came down because, it's warmer. Energy prices have come down. So that's really lifted some of the growth prospects there. And of course, China's reopening. So you have this combination of growth prospects improving, but central banks tightening to keep inflation down.
Kathy Jones of Charles Schwab there, weighing in. We are about 13, 14 minutes away from inflation data in America. Going into it, equity futures look like this on the S&P, up by a third of 1%. Yields come in, Tom, by 4 basis points. Your yield, 350.
Very good, John. We're going to get started here at 8:16 a.m. here with the inflation report coming up. Michael McKee to join in a minute, but Will Kennedy with us right now, and maybe on the linkage of inflation and commodities. Is it commodities inflation, or, as John has mentioned all morning, copper is just a statement on China reopening? I mean, to me, that overwhelms any industrial inflation.
We went into the start of the year with copper looking quite tight. Stockpiles are at very low levels. And, with people thinking about China reopening, investment, we got some news from China this week that they're going to invest many billions in their electricity grid. And that is just a huge demand driver for copper. So people see this as a very strong story. And, of course, with copper, that feeds directly through into the wider economy and raises costs for people.
Does it does it float over to other things like aluminium? Did I do that okay?
Aluminium, yes, absolutely. Aluminum is driven by
That's kind of your will.
By things like investment in electricity too, and just your growth in China if they are going to boost the economy with spending. I think a lot of different metals look tight, and then there's the broader long-term picture of the energy transition, which drives huge demand for copper, nickel, new metals like lithium, and I do think many people see a strong story there.
So we drained the SPR aggressively last year. Yeah. We were told they're going to try and refill it in and around 70.
Yeah.
And now China starts to reopen, and I just wonder if we get back to 70.
I don't think that there are many people seeing 70 at the moment. I mean, people are feeling quite bullish about oil right now. Jeff Curry was on yesterday saying 110 is the Goldman view.
Triple digits, yeah.
Yeah, we've got hedge fund managers like Pierre Andorand, who's always bullish, but, called up 140 last week. There are a lot of optimistic views there about oil. Ultimately, it will depend on how far the economy slows here. But absent a really deep recession, 70 isn't really the vibe in the markets right now.
I don't expect you to have the numbers to hand, but could you guide us, at least give us an understanding of how much the Chinese built stockpiles over the last year? Did you see any difference in the Chinese imports of crude over the last year when they were locked down?
Yes, they weren't buying crude at the pace you'd expect. I think that they'd filled a lot of it. I mean, it's a very opaque thing. I mean, the Chinese do not tell you how much crude they have in a stockpile. They clearly bought a lot of oil in the early stages of the pandemic when we had record low prices. And those strategic stockpiles were probably pretty full. Refiners did not get the import quotas that as high as they're getting now. So, yes, there was a dampening in demand to some extent, and I think it's reasonable to expect if we do fully reopen in China and we see some of the demand gains that people expect, that we will see higher imports.
When you built this, you, Stuart Wallace and Justin Kerrigan, built our hydrocarbon team. You had the courage to go downstream, out to distillates and out to refining and all that. What's the story, in America, but frankly in Europe too? What is the refinery story as we possibly revisit 100 a barrel?
Refining remains tight. We came out of the pandemic with less refinery capacity in America. We came out with less refinery capacity in Europe, and that's being added in the Middle East. It's being added in China. But that means people are moving oil all the way to Asia to get refined, and the product all the way back to Europe to get consumed to some extent. And on top of that, you've got Russian sanctions, which are just accentuating those kind of trends.
I can't keep up at the moment, Will. This is not the year that many people anticipated just a month or so ago. Will, great to have you with us in New York. Brent crude right now up by 1.4%, $83.80. WTI up by 1.3%, $78 and about 50 cents. We are about 10 minutes away from the CPI report. It's just around the corner. Equity futures going into that up 0.4%. It gets real when Mike McKee drops by the studio. Mike McKee's dropped by the studio. Morning, Mike.
Speaking of the way things change, you never want to see me on CPI days till the last year or so.
Well, here we go.
Now it's become big.
Supercore, or rather PALCORE, as you said to me yesterday.
PALCORE is the ex-housing number, which is not forecast, but people expect it to continue to go down because the contemporaneous indicators suggest that rents are falling, and that you take housing out, the rest of core hopefully is falling. Interesting thing is CPI on a headline basis, and we'll thank Will for this, is expected to post its first negative quarter or month rather since May of 2002, because energy prices have gone down. So we're expecting a 0.1% drop there. The only thing to keep in mind, and I brought a chart along on it, and you can't see it on radio, obviously, but in
it's good on radio.
In August, there was a forecast for a negative 0.1% and it did not happen. As a matter of fact, inflation started to go back up again. So there is that risk. It's maybe not two-sided for the markets, but it is there.
People get very frustrated when we start taking out all the stuff that's important to them. Food, energy, shelter. Why is this relevant? Why is it useful?
It's useful for the Fed in its analysis because they're trying to figure out whether inflation is going to come back or keep going down. And so they're looking at the individual components of the CPI report to see what's happening. And the problem is that inflation, especially the core, has been pushed up by the way the Bureau of Labor Statistics calculates the housing component, which is rents. And then they ask people, if you were to rent your house, what would it rent for today? And that's how they figure out
That's how they figure out what housing prices are.
Well, you don't buy a house every day, and people don't sign new rental agreements every day. So it takes a very long time for the data to get in and out of the report. But then there are people like Zillow and Apartments.com who produce contemporaneous numbers that show it going down.
They don't use actual rental contract statistics, or they don't use home ownership statistics. They ask you, what if you did this? Is that how they do it?
Well, they use rental statistics for the rental part, but they use them on a aggregate basis, everybody. So if you signed your lease a year ago, yours is still in there, and that increase is still in there. For homeowners, yes, that's the way they do it, is they ask people what they think their house would rent for. The idea was, this really came about during the great inflation of the 1970s, 80s,
recently,
because mortgage costs were so high. And so they wanted to take mortgages out of the calculation.
Do they do it? They tell me they don't do it this way in England.
I'm not sure if they do it that way in the UK. I hope they don't. But I don't know for sure. It's kind of bizarre, isn't it? When people find this out for the first time, they really scratch their heads about it.
Do you trust the statistics, Mike, if they're guessing inflation in housing?
You kind of have to, because
there's no alternative. It's like China.
There's no alternative. They've been doing it for so long that I assume that they have statistically smoothed it enough to have a confidence level. Most of these numbers are supposed to have a confidence level of 90%. So
can we finish on the leak? And I say the leak in inverted commas because we don't know if there was a leak.
We need to pull that up, the
Bloomberg
chart.
So what happened?
Well, in the last minute before the last CPI report, trading was 3 times what it was after right before the normal CPI reports for the last 2 years. So somebody either knew something or thought they knew something, and
it was Bramo's kids on the couch.
It could have been. Maybe that's why she's not here.
That's why
winning the lottery.
In all seriousness, though, this is a problem.
Yeah, the Bureau of Labor Statistics investigated and said there was no indication of any leak, any information getting out. So how did this happen? We don't know.
Out of interest, when does the administration find out about this number? We know when they find out about payrolls. What about CPI?
Council of Economic Advisors gets it the night before. And they can share it with the president, which often they do, I suppose, if it's good news. Don't want to be the one bringing him the bad news.
No.
But other than that, it should not get out.
The president, of course, speaks at 10 a.m. Eastern Time. Mike, this was cool. You're going to stick with us.
Yeah, yep.
The inflation data is about 4 minutes away. Going into it, equity futures up by 0.4% on the S&P 500.
Left.
Yields lower by 4 basis points. Your 10-year, 349.49. Your inflation report. I'm next. $20 seconds away from the inflation data in America. Your market with a bit of a pop higher going into this print. Equity futures up by 5 or 0.6% on the S&P 500. In the bond market on a 2-year, we're down about 2 basis points into the print. On a 10-year, we're down about 4 or 5 basis points. I can tell you we're pop higher briefly on euro dollar, just hitting 108 briefly. Back down again right now with your inflation report. Let's get to Mike McKee. Hey, Mike.
Well, it looks like we are bang on in terms of the forecast forecast for the numbers that come in. The December numbers come in with the headline month-over-month change down 0.1% as forecast. The core up 0.3 as forecast, and that pushes the annual rates to 6.5% for headline, 5.7% for the CPI ex food and energy. Doing the calculations here and see if I can get that housing one. I haven't got it yet, but we'll get it for you as soon as we can. The Jay Powell number that everybody is looking for. Taking a look at the percent changes, it looks like food was up 0.3, which is a bit of a surprise. It's down from 0.5 the month before, but there was a thought that might go down a little bit further. Energy down 4.5%. Will Kennedy just left and took his gasoline prices with him. They were down 9.4% in the month of December. So if you were driving, you noticed that. Natural gas was up 0.3, which is kind of interesting. That's the opposite of what we'd had been seeing. Used cars down 2.5%. That's always a big contributor to this. Apparel prices were up 0.5%, which a bit surprising. And then the housing numbers in terms of shelter up 0.8%, which is 0.2 higher than it was the month of November. So that is an issue for the Fed, and we are just going to have to wait just a second and try to get the updated math done here on the
John, why don't you do the markets while McKee does the updated math?
Well, let Mike work that out. I can tell you how the market's responding to it. Initially lower in the equity market by about 1/3, responding as if it was looking for a bit of a downside surprise on inflation and didn't get one. But these are early dates. We're only 2 minutes into this, and we've got to look over all the numbers. At the front end of the curve, yields are higher by 5 basis points on a 2-year to about 4.27. On a 10-year right now, up about a basis point to 3.55. We did see briefly going into the print, euro dollar, have a look at 108. New high of the session, 108.10. I can tell you euro dollar now negative just on the day, Tom, by about 0.1%, and now not even that.
There was a play a little bit across equities, bonds, currencies, commodities towards a more what I call benign statistic, and instead we didn't get gloom, but we got spot-on statistics. We haven't seen the revisions yet. Maybe Mike has them, but I'd also note, John, beneath the radar, it is claims Thursday, and jobless claims are just stunning 2 weeks in a row. They're not as important as inflation, but this is a low number. Is a fully employed America is a non-McKee generalization. He would never say that, but there it is. And
I'm employed, which counts as fully employed.
For you, Mike,
205,000 for initial jobless claims after 206 last week, but these are also still holiday adjusted, so we kind of give with a grain of salt, but it doesn't suggest any problem.
Do you have this
in the labor
Powell
market
statistic?
We don't have the total. We don't have the accurate one, the one that I want to use yet.
Okay.
But we do have the calculation that the BLS makes of less food, shelter, and energy, and it was down on the month by a 0.1% after a 0.1% drop last month. So it looks like no change, still going down without housing. The difference is the BLS number includes lodging away from home, including hotels and things like that. And most economists think that Jay Powell is not talking about that. He's talking about rent and home prices.
25 for the Fed now, early February?
No reason to think that they wouldn't at this point. Most of them have been saying we want to get to 5%, but they haven't said we need to go as fast as we did before.
Tap on the back for Wall Street. Just a little bit of a pat on the back, Tom. Bang in line with estimates, this number. Mike McKee, thank you. Looking at the price action right now, equities down just 0.1%. As I keep saying, early days will take some time to process this. The yields are higher by a basis point at the front end, not a major move. 4.23 in the FX market. Euro dollar now punching back towards 108. So there you go. The FX market all over the place around this print in the last couple of minutes. 108 at the moment on euro dollar, positive 0.4. If you're just tuning in, the data as follows. Headline year over year CPI drops to 6.5 from 7.1. Bang in line with estimates. A lot of people very focused on month-over-month core. Strip out food, energy over the last month, 0.3. Bang in line with estimates, Tom, of 0.3 and up from 0.2 in the previous month.
Long ago and far away, and we'll have Mike drop in here as he gets more information, particularly on those key ratios. Long ago and far away, we used to worry about what sandwich Chairman Greenspan was carrying into the Fed meetings or maybe into the inflation report. Vincent Reinhart is expert at that. Vincent Reinhart is with Dreyfus and Mellon and, of course, led all of our economic research at the Fed during the Greenspan years. Vince, just perfect to speak to you this morning. Thank you for joining. This micro-analysis of data post-pandemic, have you ever seen anything like it?
You mentioned Alan Greenspan, and he loved getting into the details of the data. So, the fact is, the Federal Reserve Board building is pretty big, and it's stock full of economists, and they look into the details of all these reports. I think that the Fed, Chair Powell, has been extremely transparent about a very specific mechanism about inflation, the super core, or the Powell's power core, really getting down into the third level of detail.
I want to make clear, John, we need to continue to look at these markets. They're narrow moves, but nevertheless, we were green on the screen with a real plunge down. And John, just as Mr. Reinhart gives us wisdom, boom, we come right back in the equity space.
Interesting to see the FX moves as well. That's a 2% move on dollar yen, Tom, which I think is what you were looking for.
Yes, thank you. I missed that.
Move.
We're
that's
now below 130.
It's a break of 130. 129
stronger yen there, and a euro dollar 108. We'll continue to look at those major pairs here with Vincent Reinhart as Mike McKee dives deeper into the CPI report. Vince Reinhart, is this inflation completely pandemic induced, or do we have issues that harken back to when your lapels were wider?
So I never wore that wide lapels, Tom, but I think the answer is, why is Jay Powell going into the details? Because it's the mechanics of inflation that has them worried. Inflation is embedded in the persistent part of the basket that households consume, that services less shelter, that Mike keeps mentioning, that Jay Powell keeps mentioning, that shows up in all those speeches. And in some sense, yes, we got an inflation report exactly as we expected. We also got a reminder that the labor market is running pretty hot. From the Fed's perspective, aggregate demand has momentum. That's putting pressure on resources. That will put pressure on wages and therefore on prices. Maybe not this month on prices or wages, but the mechanics are there. The mechanism that you worry about inertial inflation is there.
Reinhart and Orphanides and others from another time looking at the long term. We'll continue with Vincent Reinhart of Dreyfus and Mellon, looking at the micro short term as Michael McKee. You're diving into the pages and pages of data, Michael. What do you see?
Yeah, looking at the core services X housing, which, as I mentioned, you take out the owner's equivalent rent and rent of shelter, and it is up by basically 25 basis points, which is a little bit higher than that BLS number that we gave earlier. Rent of shelter rose 0.8, which is more than last month, and it rose 0.8 in terms of primary residence, which is the same as last month. And then owner's equivalent rent up 0.8. A tick higher than the prior month. So we're still seeing the impact of higher home prices and higher rents in the CPI report, which is what Jay Powell's trying to take out so they can get a cleaner read on where core inflation is.
The dollar weakness, the market story of the day, without a doubt. Equity futures just about unchanged on the S&P 500. In the bond market, you've got this drop away, just falling away now at the front end of the curve again. We're down 5 basis points on a 2-year to 4.17. They're looking to hike again over at the Federal Reserve. This 2-year keeps on rallying. Your 2-year, 10-year spread still about 66 basis points, so no real drama there. But in the FX market, here's the move for you on dollar yen. Dollar yen briefly breaking through 130 with some yen strength. That was a 2% move. It's now a 1.7% move. And I can tell you, just before the print, And after the print, euro-dollar had a look at 108. Now back, Tom, to 107.73.
I'd also look at Mexico with some Mexican strength and renminbi to 4 digits, 6.7375 strong yuan as well. Vincent Reinhardt with us and thrilled he could join this morning. Vincent, is there an underlying theory at the Fed? Or are they literally making it up as they go? Is there Oken? Is there Phillips? Is there Taylor? Is there Reinhardt? Or are they flying blind?
They're doing the best they can, and it's actually pretty conventional. Inflation has a number of parts to it. John Williams talks about the inflation onion. We've gotten the good news on the outer shells. Commodity prices off, energy prices in particular off a lot. Next shell in, goods prices are doing better because supply chains have mended, market economies work and shift resources around. They're worried about the core. They're worried about the inertial part of inflation that is importantly gets embedded into contracts that are written at different times. And so it's a slow slog in which inflation has built, and they're worried it's going to take a while for it to come down. So, yes, I think markets got what they expected, even though they were hoping for good, even better news. Don't try to get between a rally and reality. But the reality is, Ed's looking at the details, and the details are supportive of 2 of the 3 planks to the story they rely on.
Hey, Vince, this was great.
There's momentum, slack, maybe not so much right now, wages and prices, but the other 2 things are the reason you worry about future wages and prices.
Vincent Reinhardt there of Dreyfus and Manor. Hey, thank you, Vince, as always. Equities down about 0.1%. No real drama here into the bond market. Bit of a rally at the front end. Yields lower there by 3 or 4 basis points. Just putting a little bit more pressure on the US dollar. Coming up in the next hour, Jim Bianco of Bianco Research on some of these moves and what it means for the Fed. Priya Misra of TD. TK will throw some LIBOR in there for you, OK?
Please do.
And Jonathan Golub of Credit Suisse. Next stop for this market. Earnings tomorrow morning.
Yeah, which matters. I'm sorry, Mike Wilson's nailed this at Morgan Stanley. This time, it really matters.
We'll see. Hey, Mike, that was great. Thank you, Mike. Appreciate it. Mike McKee's going to join us at the top of the hour.
I'll stay with Tom, too.
Are you going to stick around with Tom?
Yeah,
That's kind of you. OK, I'll see you in about 20 minutes.
Okay.
Hey, Tom, that was great.
Yeah.
A lot of people messaged me this morning, wanted to know what was in that tank a little bit earlier on.
Oh,
I send you the corks from New York. This is Bloomberg.
Swiss aperitif.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In Ukraine, fierce fighting is raging in a town in the Donetsk region. Ukrainian military officials say that Russian attempts to capture Soledar are failing. It's located just 6 miles from the strategic city of Bakhmut. And capturing Soledar would be a symbolic victory for Moscow after a number of defeats. The U.S. and Japan are taking steps to counter the growing challenge posed by China and its ties with Russia. They announced plans to strengthen defense cooperation on land, at sea, and in space. The U.S. plans to reorganize its forces in Japan so it can deter and respond better to increasing regional threats. More than 7,000 striking nurses at 2 New York City hospitals will return to work today after reaching a tentative deal. Union leaders say the workers at Montefiore Medical Center and Mount Sinai Hospital will see pay raises and improved working conditions. The strike began Monday morning after 4 months of contract negotiations fell through. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Bloomberg Surveillance, an eventful morning to say the least. Lisa Abramowicz and John Ferro, Tom Keene with you. Lisa on assignment, Ferro getting ready for the 9 o'clock show. Thrilled you're with us on radio and television. And thrilled Michael McKee's with us because the engineer from Wharton, one of the people I lean over and I really listen to, Mr. Harker of Philadelphia. Michael McKee, Harker Speaks.
Yeah, Pat Harker giving an economic outlook this morning up in Philadelphia. And basically, this was before the CPI came out, but he said he sees signs of inflation cooling, and he thinks the 25 basis point moves will be appropriate from now on. And he is a voter this year. So he's already in that camp, and the numbers come out, Tom, as expected, with inflation continuing to fall. So no reason to think that he would go back on that. He also says he does not expect a recession, but I don't think you'd ever get a Fed official to say we're going to have a recession.
They're not going to say, but 1% GDP is not in the zeitgeist right now. Am I right? Still, the zeitgeist is gloomy as it was 4 weeks ago.
Well, it's starting to come up a little bit, and you've noticed some people beginning to talk about the soft landing possibility because the data have come in stronger than expected for the most part, and so that's possible. The Fed had forecast 0.5% growth this year. Now he's up to 1%.
An adult like you, are you looking to February 1, or are you already cheating and going out to what I believe is March 22?
Well, I think we go out to March in terms of the major question for the markets going forward because, if we've got Harker at 25 basis points, and we heard from Susan Collins yesterday, 25 basis points, I think you're looking at a Fed that's going to be committed to a lower rate increase. And then the question is, do they go beyond that? Do they continue to raise rates, and then do they continue a 25 basis point move? That'll be the argument for the markets as we collect data between now in March.
Michael McKee, thank you so much. Much more from Mr. McKee through the morning here as he dives into the pace of inflation in America. We're going to Segui right now with red and green on the screen. The VIX has come in sharply, 20.24, an important statistic there on an S&P that printed 4,000 earlier. And we are privileged for a repeat performance from Dana Telsey's Chief Executive Officer and also of research at Telsey Advisory Group on the pulse of American retail. I've got to go to the gossip of the moment. And I'm going to say this with respect. Richest guy in the world, a guy that took Louis Vuitton and figured out how to do luxury fashion. There's nepotism involved here. How do you address, as one of the most grizzled veterans on the street, when it is about relationships? If it's Prada in relationships, or it's LVMH with his daughter coming over to run Dior, is that a plus or a minus?
Right now it's a plus. And the reason why? These aren't new people going into those business lines. She's been involved in Dior. She's been there 20 years. So you're getting experience, and you have to say the succession planning. But look at the depth of talent underneath her, and frankly, in each of the brands. What they have with 75 brands at LVMH, they have the experiential talent to move everyone up the line, and that's what they do.
These have log convexity. These luxury groups off China opening and the rest, you predicted this with your team. They're a moonshot right now. Can you acquire shares this morning in these heritage luxury brands?
You can, because the next development will be the reopening in China and that China consumer. We've already heard from others. I mean, look at what Neiman Marcus most recently said about the strength of the holiday season. And you're seeing the product innovation driving demand.
Right.
So I think it's going to be a good season. But let's keep in mind, we're still having consumers in all areas with the volatility of the market. There's been a step down in terms of what the rate of growth is compared to last year and even in 2021.
So one more question on luxury. Can you overweight luxury now? Is the market is overweighting luxury?
I don't think the market's overweighting luxury yet.
Really? With the moonshots we're seeing in some of these stocks?
I think there's more opportunity when the holiday sales come in, because also the ability to drive strength out of China, that's going to be the next
single best
evolution.
buy now in luxury, particularly when you look to China. What's your single best buy right now?
I mean, it's LVMH in the international, it's Tapestry in the domestic. And the other one, Ralph Lauren. Ralph Lauren has a significant opportunity.
We'll go to that in a moment. I mean, you're killing me. You know how much I hate this phrase. This is Coach, right?
Right, yes. But it's Coach, it's Stuart Weitzman, and it's Kate Spade. And what they've been able to do in resetting prices, updating the brands, capturing
They had a home
younger
run in the
customer
Tom
base.
Wesselman. They did the Tom Wesselman thing. Is that where we're going? Where these brands come in and they get famous celebrities and artists, like they'll do a Dana Telsey coat or something like that?
I don't know about that. It's
with
collaborations.
Wesselman?
They matter. Collaborations drive demand. And you know why?
Right.
They go viral on social media. Everyone sees them, and there you go. Sell-through happens.
Does social media help Macy's move forward, or the big boxes that Joe Feldman looks at?
Yeah, it does. I mean, we just had a dinner with Macy's the other night. The personalization and pricing science that's being allocated to their merchandising is really helping them navigate a consumer environment that's definitely a bit more challenging for the income level of the Macy's consumer.
How do they manage expenses? At that dinner, did they talk about the cost rationalization of suburban malls that are off the mark?
Well, not only that, but what about the Bed Bath & Beyond stores that could come up for play, and there's a healthy demand, even in Marketplace by Macy's or the off-pricers want those boxes. Those are good boxes in great locations.
For the same concept?
For Macy's, it's a different concept. It's a smaller Marketplace by Macy's concept that they put in there. But let's see what develops with these Bed Bath & Beyond locations.
My recollection is Telsey Advisor Group avoided the carnage of Bed Bath & Beyond. Let's be constructive. Why did they fail? What's the best practice forward for retail not to do a Bed Bath & Beyond?
You need branded merchandise under a halo, not just private label brands. And also you need to be able to continue to innovate the offering. And yet home goods out there taking share, and you didn't play up what made Bed Bath & Beyond so special. Go in there and buy more than you originally expected.
Got a lift to the market, the VIX in a stick here with Dana Telsey, a Telsey Advisory Group, watching this carefully. Less curve inversion than what we saw off the CPI report. Dana, I've got to wrap up with the guy who is iconic. Ralph is Ralph. Does he have nepotism in play like Mr. Arnault, or does he have a succession plan? He's a bit ancient.
I think overall, look at the team that you have there now with Patrice Louvet and Jane Nielsen, CEO and COO. They're taking the brand to the next level and modernizing it, and it's showing up in the numbers and the AUR, and consumers are reacting.
One question, single best buy right now for Telsey Advisory Group across all your team?
I mean, we have a bunch of names that
Amazon?
we're interested in. Joe likes Amazon. It's been a favorite name of his. But also, let's take a look at what some of these off-pricers are doing. I mean, the TJX certainly we're watching. I would say that you look at Abercrombie & Fitch, and it's exciting.
Really?
Ralph Lauren. Yes.
Do you know that Michael McKee almost was a model at Abercrombie & Fitch years ago on Fifth Avenue?
Well, you know, it's a different score today than it was then.
Yeah, I would have been in the pith helmet.
Everyone knows this brand. They're getting resurrected again. How's Abercrombie & Fitch going to do it? What's the pixie dust this time?
The pixie dust this time is the Abercrombie & Fitch brand has aged up. It's better quality.
Aged up.
Yep, it's not the teens. And Hollister is showing some improvement in their assortment and getting the men's business too.
Dana Telsey, thank you so much. We're going to age up now and continue with Keene and McKee as we age up. Tell me about the ageless comments from Harkin, and also, Mike, what you see in this historic inflation report.
Well, Pat Harker is joining a crowd that says 25 basis points, and the numbers today justify that with a 1/10 drop on a month-over-month basis in December. Pushes the headline number down to 6.5%. So on the path to where the Fed wants it to be. Interesting thought here with Dana here is I'm looking at apparel costs, and everybody thought maybe we'd see a discount on that, but they're up 0.5% because men's clothes went up. Almost all of women's clothes fell. Men's and boys went up.
So the interesting thing there, company after company I spoke to over the past 3 days, men's is showing improvement, and all the retailers, inventory levels are coming down faster than expected, and that's going to be a good thing.
They told Tom he needs a new suit. The interesting thing is men's and women's shoes.
A bow tie.
Yeah, men's and women's shoes.
This bow tie is over 20 years old.
That's why.
That's the problem. I look to wrap this up. Dana, I'm so sorry. I've got to go to Mike here as we drive forward into the Bloomberg morning. Mike, are we going to have the same inflation frenzy 30 days from now?
Sure.
I mean, this is
because it's all about inflation for the Fed, and the Fed's going to keep going or at least hold until they are convinced that inflation's going down to 2%, and we don't know what it's going to take to convince them.
John emails in from Manhattan. He says, ask Dana about when Tiffany opens. That's like soon, right? Like a couple months here?
Should be second half of 2023, brings more traffic to the whole area, has a restaurant in the business, in the store too. It's going to make 57th Street very exciting.
Look what they did to the prices of Schlumberger and that at Tiffany. Are you kidding me? The Arnauds are nuts.
I think they walk around saying, take the price up, it'll create demand.
That's good. Dana Telsey, thank you so much. Our economic report from Telsey Advisory Group today. Please stay with us. Markets all over the place. They lift. Futures up 20. Good morning.